All right, so we got non-farm payrolls and unemployment data. Drop live right here at 8:30 Eastern Standard Time. Let me make sure this is good on screen. There we go. 8:30 Eastern Standard. What's up, Saga, Ray, Vassal, Swab? See if Toss is working for me yet. Let me get some music going here. Not a lot of sleep. Yesterday was my kids' Christmas recital, so I didn't get a lot of sleep. What's up, Eric? What's up, Thomas, MF, Vassal, Faz, Beach Bum, Ryan, Eric, Swab, Ray, Saga. What's up, guys? Good morning. I'm starting the stream a little bit earlier than I normally do. I haven't even sipped coffee yet. It's early in the morning, man. Honestly, I stayed up late last night. Ugh. We get everything else here. Oh, man. All right. Save your energy. Nah, I'm fine. I got like 6.5 hours, and so I feel fine. If I get 6.5, I feel great. So like I actually feel better if I get like 6.5 hours of sleep than I do if I get like 7 or 8, especially if I get 8. So I feel fine. If I get less than 6, it's a problem, and I'm like, you know, I feel rough. But as long as I get 6.5, I feel good, and that's what happened. I got 6.5 hours. Do you think non-farm payrolls could be affected by the last hurricane? I mean, could. I don't think they are, but they might be. It's possible. All right, so non-farm payroll expected at 214,000. It's a little bit low. I mean, that's actually not too low. Last time they were expected at what, like 265s. So it's not super low, but it's not high either versus like what they normally do. All right, unemployment expected at 4.2%. I know there's got to be a alignment center. Okay. There we go. Soundhound AI, man, it's been a while since I've looked at the stock. Bitcoin now back under 100K. So So yeah, Bitcoin now down under 100K. It's at 1340s. I was trying to subscribe to your channel, but there's no option. Do you know where do I have to go? I mean, you don't have to go anywhere, bro. You should, if there's no option, you should already be subscribed. There should be an option to subscribe underneath, underneath the, yeah, underneath the video. I accidentally, when I scheduled the stream yesterday, all right, guys, we're here. Let me do a poll. I got you guys. Hold on. What's your analysis, guys? Buy or sell? What's the news? Yeah, I mean, Vassal. So listen, brother. If you're commenting right now, you're subscribed to the channel already, bro. We're in subscriber only mode. So if you're subscribing right now, bro, you're already subscribed, dude. You don't need to subscribe again. You're already there. You can join. You can become a member. Again, my whole philosophy is I don't really want to have any hold on. What's it expected at? Will the non-farm payroll data show up higher or lower than the 214K expected? My whole philosophy is I don't want any paywalls behind content, right? So there's no paid content, right? Like you don't get anything extra, you know, and like that's an important thing. So you can become a member. You get access to these, you know, majestic emojis, but that's all you get. We don't have any members only content, I guess is the point. If I was going to do that, to be honest, I'd just sell a course. All right, guys. So we let our green streak in yesterday. It was our 6th green day in a row. You know, it's all right. Whew. All right, guys. So non-farm payrolls data 8:30 Eastern Standard Time today. It's a big day. Bitcoin under 100K. Nvidia sitting lower this morning. We got Soundhound down there at 13s this morning, looking kind of weak here. Somebody's asking me about SoundHound. SoundHound's one of those little, like those smaller AI stocks that might get big. It might also crash down to like $3, $4, $5 a share, right? We never really know, and so it's high risk, high reward. I'm not telling you not to invest in it. It's just high risk, high reward. It's something you want to be very weary of and careful with. That's how it goes with that type of stuff. If we look at the NASDAQ here, the NASDAQ 100, we're at 21.4s, almost 21.5s again. I'm trying to see what the all-time high levels were, which are recent. So all-time highs are right around 21.6. It looks like we hit that yesterday, 21.6 for all-time highs. So we're getting up there. We're getting close. What's up, Hero? Yeah, we'll get a timer up here. So Nonfarm Payrolls drop in 1 hour and 10 minutes exactly. There we go. We got the timer up here. I'll stick this like right here. Okay, we got Nvidia at 144s. Let's talk about some news stories today here, chat. All right, so Intel added some much needed help to its board with stock on track for its worst year ever for Intel. Insurance giant Aviva agrees to buy Direct Line for $4.6 billion. So Direct Line has accepted an improved takeover offer from Aviva that will see the UK's largest insurer fully acquire its smaller rival for about $4.6 billion USD. Caprock Mining signs an option agreement to acquire Destiny Gold Project in Quebec, so a gold miner company entered into a binding agreement to acquire 100% interest in Destiny Gold property in Quebec. Outside of that, we'll see what we get. Where's Tesla at right now? So there's the NASDAQ, there's SoundHound. Here's Tesla. Tesla at 370s here. So Tesla's up, man, up a lot too. There we go. Let's see if Nvidia gets up there. I'm gonna lock myself out of Top Step for now. We might day trade. Let me see. Okay, so we're gonna take this account, we're gonna lock ourselves out like we've been doing every day. Set the custom lockout to 8:22 a.m. So we are now locked out of this account. We have another account that we might trade on today, so we'll see. But look at NASDAQ futures up, man. It's up big. Wow. Look at the NASDAQ pumping this morning, chat. Tesla up to 374s. Nvidia's still fighting its way back. Bitcoin's still down. Is there a reason Bitcoin is down so much, to be honest? It's weird because I could try uninstalling. Leverage Fresh, what's up, Jeffrey? In the past, I used to hold Tesla overnight, then I start losing, so not anymore. I just trade to get every day now, reclaiming the wick. I would say they had the option to have it repeat every day. Yeah. Alright guys, so NASDAQ is up there. I do have a little bit of room to trade this morning. I'm looking up some news. I don't really see any reason, you know, for I don't really see any reason for Bitcoin. Look at Tesla though, man. I think the whole market might just be following Tesla up, because Tesla's up big. Alright, so looking at Bitcoin news. Alright, so basically, people are worried about payroll data. So I'm looking at a couple articles and it says US stocks could open in the red on Friday as investors exercise caution and take a break after pushing the Dow past 45,000 for the first time. Futures of all three major indices were marginally down on Friday, pointing to cautious sentiment on Wall Street. I don't know, the NASDAQ looks kind of green today, but let's see when the day started. Okay, it's down very small. It's basically completely flat right now, so the NASDAQ might actually completely bounce back and go green on the day. I see a quote from Jerome Powell that's still playing in a lot of people's minds. It says, quote, "The labor market is better and the downside risks appear to be less in the labor market. Growth is definitely stronger than we thought and inflation is coming out a little higher," end quote. Powell during the Dealbook Summit on Wednesday. At the same time, though, CME's Fed Watch tool still shows about 70-30 percentage likelihood that we're going to do a 25 basis point cut. So that really hasn't changed, and if anything, the likelihood of a rate cut has gone up since Powell spoke on Wednesday. So interesting. All right, so Bitcoin above 100K is precursor to the S&P 500's performance for the rest of the year, according to Tom Lee. I don't know, man. Bitcoin's down a lot. Tesla up some. NASDAQ basically flat. Nvidia slightly green on the day relative to pre-market, but it's not like super green or anything like that. Now that I'm looking at some stuff here, so interesting. All right, so look at the NASDAQ, still fighting. NASDAQ looks pretty strong today. Again, payroll data expected at 214. Last time they showed up at like 12, which was a shocking number versus like, what were they expected last time? Let me ask AI. This is what AI does really good. Alright, so we're reinstalling TOS. Seeing if that would work. But let's check out what the last... Alright, so last month the expected outcome was about 100K. So it was about 90% worse than expected. Okay, so for November 2024, forecast predicted a rebound with expectations of approximately 200K to 208K new jobs. So that's today. Last time, we only showed 12,000 jobs for October. And so today's the November report, and yeah, we'll see what happens, man. It's interesting. All right, we got this little dip though. Tesla up there. I might buy this dip. I kind of like the dip buy here. Hold on. So I might buy this little dip in my express funded. Ah, we're a little late. We got 4 contracts here. Oh my goodness. We'll take 5, and that's it. All right, we're almost green again. There we go. I only got 3 contracts now. We scaled out. I think I took a little bit large size to begin with here. There we go. 1 contract left. Yeah, we got about an hour left here, chat. Yeah, we got NFP data. It's a huge day today, to be honest, guys. I'm going to add a little bit to this here, take 2 contracts in. And now we have a little bit more room to maybe add a little bit more. There we go. We're going to take that off, lock that in. And we'll get out the rest completely flat here. So we made about $15, $20. It's a small little data trade to start the day. Yeah, please stop spamming crap meme coins that nobody's ever heard of. Top. Thank you, sir. I need to scale out better. What do you do? Enter 5, scale 1 at a time using sell market. Yeah, I don't know if that's the best way to do it. Like, I'm just taking early trades. I'm trying to have the highest chance of winning versus extracting larger gains out of the market. And there's pros and cons to each system and strategy that I use, right? So I don't know if copying me here is a good move. Oh yeah, I'm definitely not going to be having any short-term positions during payroll numbers. Hot number, no cut. Bad number, rate cut. Yeah, that's basically it, right? Like really hot number, right? So if we show up at like 250, okay, you know, the odds for a rate decision are going to change drastically, in my opinion, right? If we show up at like 250s, 260s, you know, the probability of a pause in December is going to go up dramatically, right? Versus all the other potential outcomes. Are we back to bad news means good? I don't know, man. We've had some reactions that have implied that, but it's certainly not 100% definitive that we're back to good, bad, bad, good scenario. Yeah, toss still ain't working, man. That's weird, dude. Like, it's just on this computer. You know what I worry about with, honestly, like, how old is this computer? Okay, it's probably time for me to get a new computer. My computer's almost 5 years old, and that's freaking a lifetime for a desktop. I'm gonna go buy a new one today, probably at Walmart. I might order it online too, to be honest. But that's probably. But the issue is just planned obsolescence, man. That's my issue with some of these things, just planned obsolescence. I'm going to take my RAM, my memory sticks out of this one and put it in my new one too. I have 4 different monitors. I'm going to upgrade pretty soon though to just get 2 ultra wide monitors, right? Like I can get a 45 inch for about $700. You know, all right, we're gonna buy back into this here. We got 3 contracts. We'll add up to 5 or 6. If it drops more, we'll add more. We got payroll numbers coming out in less than an hour. Chat, hit the live button next to the play button. Make sure you're fully caught up on stream. I can see I accidentally scheduled my stream for 6:30 p.m. instead of a.m. last night. It was late. I'm trying. Although when I look at this here, like, it might drop more. I don't know. Nice, so now we're nicely green. No. I don't know who that is, David. Yeah, I said Walmart. It's probably not going to be Walmart. If I buy a PC, I'm probably just going to order it. Realistically. I'll just order a desktop. I'm not a hardware nerd, though, so, like, I'm not the type that wants to like part out and buy all the best parts, you know. So what direction you think gold is going? Nah, I'm not gonna get a MacBook. I'm not an Apple guy. Apple is really expensive for the specs that you get with it, and I know they're fast, but they're really expensive for the specs, right? Like if I want a i9, you know, with like, you know, 28 gigs of RAM or something like that on an Apple, that's gonna be freaking $4,000 minimum, you know. And so I don't think so, man. I'd rather just get a PC. Alright, we're probably just gonna take those last two contracts off simultaneously here. It's early in the day, so we're being very loose. We're out with the rest. We got our break even there. I don't want to risk it. Yeah, I don't really have issues with my PC though. The only reason I'm getting issues with this one, I think it's honestly it's planned obsolescence. Like I think after 4 or 5 years, even though I added RAM to this thing, so this thing's got plenty of memory. I think it's planned obsolescence, to be honest. I think after 4 or 5 years, they want you to buy another one, and so, you know, conveniently things stop working after 4 or 5 years on a PC. Even though technology with PCs have gotten so freaking good modern day, it's very unlikely that this happens naturally in PC life cycles. I'm sure it's much more probable just planned obsolescence, you know. All right, guys. All right, so I kind of want to buy the dip again, but I think I'm just jumping back in too much. All right, guys, we got the big payroll report today, guys. It's a huge report, to be honest. It's a monster report, dude. Alright guys, so we're down. Tesla at 375s. Nvidia at 145s. Hey, what's up, Wiz? Which way do you think gold will move? Let's take a look. So here's Nvidia. Here's gold futures. Gold futures still pretty flat, man. They've been pretty sideways for a while now, man. They might be going up. Bitcoin's moving down, so maybe that's making gold pop up. But if we put up like a long-term chart here. Type fast. Let me try. All right, guys, we still got 45 minutes before payroll numbers. This is a huge NFP report. All right, guys, we're at 21.5s now. Gold up to 2600s. Still pretty slow, though, man. There's not a lot going on there with gold. So we're looking at Charles Lang. Supermicro is here to support AI's massive tenfold expansion of the Colossus supercomputer in Memphis with over 1 million GPUs by establishing local operations and production, validation, service, and support with our optimized data center building blocks and ambient. Alright, guys, we still got 45 minutes. We got almost 500 people here already. So typically for non-farm payrolls, we have thousands. So we'll see what we get today, though. As to the non-farm payrolls, which does the market in general prefer, a higher or lower number? Well, it's nuanced. It depends on how much higher or lower, right? Like if we're neutral, the market typically behaves in a neutral way, right? Sometimes the market wants economic strength, and you might hear this and think that the market always prefers economic strength. I should have bought the dip. I remember I was talking about buying the dip. I should have done it. So you might hear this and think that you should always be going long if the payroll numbers come in high, but that's not always necessarily the case. A lot of the time, the market reacts negatively to high payroll numbers because of inflation fears. You know, and if you base it off of what Jerome Powell said on Wednesday this week, Jerome Powell said, the labor market was more resilient than expected, and inflation was a little bit worse than expected, right? So basically he said the economy's a little bit stronger than expected. Inflation's in turn, right? Because these are correlated. In turn, inflation might be a little bit worse than expected moving forward. It is something that he said. And so if those fears are still in everybody's minds based off of what Powell said, payroll numbers might make the market react negatively if they come in hot. At the same time, though, you know, and just to add to that type of sentiment, I think the market wants rate cuts. I think rate cuts are pushed. Rate cuts are wanted. The market wants the Fed to cut rates. And I think if we have a really, really strong payroll report, it means less likely that we're going to cut rates aggressively, right? So it's less likely that we're going to cut aggressively. And so, you know, if payroll numbers come in really freaking hot, again, less likely that we're going to cut rates aggressively. And so take whatever you want from that. Maybe that means the market moves up. Maybe that means the market moves down. Nobody freaking knows. In convention, you know, the market's going to go up because of if the payroll numbers are stronger than expected, because that means economic growth, and in general, economic growth is a plus, right? Like people tend to want the economy strong, but the consequence of a strong economy is inflation, and I think this is something that a lot of people don't quite understand, because, you know, if I say the economy's strong, they bring up how high prices are, right? And that's just agreeing with me, essentially. And so you got to understand, you know, strong economy, higher prices; weak economy, lower prices, but a weak economy, right? So that's the nuance of Fed decisions and rate decisions and stuff like that. And so we'll see what happens. The Fed's still doing quantitative tightening as well, where they're reducing their balance sheet, which is a hawkish stance. Well, we're down here. I'm definitely going to cut this. This is a big drop quickly. So we're probably flat on the day now. We lost 20 bucks just now, but we've made 11, 4, 2. We're almost completely flat on the day, to be honest here. Yeah, we might be down like $1. Let me see what we're at. It's not high. Thoughts on Apple hitting 300 next year? I don't know. It's possible. Apple's been breaking lifetime highs. It depends on if we get a bullish year. Again, I've told you guys this. I think we might have a little bit of bearish action next year. We've gone up a lot, man. We're very, very rarely does the market pump. Very, very rarely does the market pump up that many years in that strong of nature in a row, right? So very rarely. All right, guys. Big reports, big data day today. Big reports, big data today. Look at that drop here. All right, guys. So as of December 6th, U.S. stock markets are experiencing a dynamic phase. Investors are closely monitoring economic indicators and corporate activities. On December 5th, the Dow Jones closed at 45,000 points, marking a significant milestone. However, it experienced a slight decline of 0.6% today. The S&P 500 and NASDAQ also saw minor decreases, each shedding approximately 0.6%. Now, Bitcoin's big milestone in volatility is here because Bitcoin is now back under 100,000. It beat 100K for the first time on December 5th, but retracted to roughly 99,000 by market close. This volatility is impacting related Bitcoin and crypto stocks like Mara, Riot, Coinbase, MicroStrategy, and more. Companies like DocuSign, GitLab, and Samsara reported mixed earnings reflecting varied performance across different sectors. Notably, corporate stock buybacks have surged, authorizations reaching 1.25 trillion for the year, indicating strong corporate confidence. Investors are big today on the November jobs report. And again, we're going to cover this live. We are the most accurate and fastest coverage of this report by far, I think. And so again, wait for it. We're going to provide key insights into the labor market, health, and influence the Federal Reserve's upcoming policy decision on December 18th, which we're also going to cover. Analysts are forecasting the addition of approximately 214,000 jobs in November. And this is a huge report. Tesla pumping up this morning right now, guys. Tesla is now at 376s, and internationally markets have shown mixed results. So European stocks have gone down or have gone up slightly. Asian markets are down slightly, specifically in Japan and South Korea after martial law implications earlier in the week. Geopolitical developments such as political turbulence in France and South Korea have also influenced market dynamics. Still, investor sentiment remains optimistic, I would say. Analysts anticipate the stock rally to continue through the year's end, supported by strong corporate earnings and potential policy reforms under the current admin. And so, yeah, we'll see what happens. What do you guys think? Let me know in chat right now. Let me look at our polls here. We got our poll going live. 59% think payroll data is going to show up higher than expected, not lower. So, again, 59% think payroll data is going to come in hot. We will see. We still got about 40 minutes left, 36 minutes to be exact, until market data comes out and non-farm payrolls. Unemployment's also pretty important because unemployment's expected at 4.2%, a slight bump up from the 4.1% it showed up at last time here. And so far, the NASDAQ is almost completely flat on the day. It's almost at the exact previous close on the day here. So it's not really doing much. We ended up gapping down originally this morning and then kind of fighting our way all the way back up for the rest of the day here. So yeah, we'll see what happens. We'll see what happens. Yeah, we gotta hype up our music here, guys. Don't judge. I got this soundboard I never freaking use, so I might as well use it, right? News releases faster than Bloomberg. Yeah, I think we're faster than almost everybody, to be honest. You know, there's a reason we get thousands of people show up here, you know. All right, so we're up there at 21.4s, 21.5s. Tesla at 377s. Gold at 26.60s. Maybe silly question, but what's the difference between jobless claims on Wednesday and unemployment today? So jobless claims was on Thursday. It was yesterday. It showed up lower than expected, showing a weaker economy than expected, which actually made the market react somewhat positively. The difference between jobless claims is how many people are filing for unemployment week to week. It's a weekly unemployment filings report. So it drops weekly versus today's report, which is mostly based around payrolls, but also unemployment. But the unemployment report that drops today is based around percentages for the month. So that's the difference between jobless claims. That's the big difference, is that today's report is based around the monthly percentage for November, right? This is the music that brings me back. Yeah, we try. Hey, y'all go join Beach Bum. Give Beach Bum a subscribe. Good dude. Covers a lot of great swing trading content. Check him out. Give that man a subscribe. Check out his live streams this weekend. Yeah, get ready, guys. 30 minutes left. 30 minutes. And a crazy thing, like, as we get closer and closer to the stream, or to the data, we'll have more and more people here, and we cover it fast. Feels good, man. Feels good. You can see the expected numbers at the top of the screen. The NASDAQ has broken over the 200 exponential and is kind of consolidating now. Tesla, again, the big story of the day, man. Look at Tesla, up to almost 380s right now, guys. What a crazy move, man. And Tesla's one of those stocks that just has so many haters, bro. I don't understand it, right? Like, I've never found myself hating a specific stock, right? Like, I might not like a specific stock, but I'm not going to get mad if a stock pushes up, right? If anything, I'm going to have FOMO, and maybe that's really what the hate is disguised as. It's FOMO disguised as hate, because, again, I don't care about politics. I'm neutral. I'm very neutral, to be honest. But I think it's pretty easy to see if Tesla stays doing what they're doing. They are getting so much data and technology from these cars that they're on the forefront of FSD, and that's the future. Like, I don't care what anybody says. If we continue on the path we're in, that's the future. Cars are going to drive themselves in 20 years. Like, that's just, I think, a very self-evident technology evolution, is that cars are going to drive themselves. And so trying to bet against the company that's on the very front of that, I think is very silly. I think it's very silly. And I think people have to stop trying to top pick the strongest companies in the world. It's dumb, right? It just doesn't make any sense. All right, we got over 600 people here. Still got over 30 minutes left. Hey, all good, Beach. Which bug? Bug? What bug? Hey, give me your predictions for job data. Do you think it's going to come in at 160, 170, 180? It's expected at it's expected at 215. So, yeah, no, I'm not mad if people don't want to invest in them 7.5. I'm not saying that. And again, that is their right to do it. I'm not against it. I'm supportive of people doing whatever they want to do. But I also don't think people should get upset if it pushes higher. You know, I'm not saying you have to invest in it. I'm just saying you can't be shocked regardless of politics, right? Like, again, and I don't know how long Elon will be there. I think if they keep rejecting his pay packages, he might just kind of step away anyway. And I don't know whether I'm sure the market would probably interpret that negatively initially. But eventually it'd bounce back and be fine. Cameras cannot work in all weather conditions and scenarios, which makes it useless as a total FSD solution. Well, sure, but you know, one of the things, right? Like, here's a good example of this, right? 5 years or so ago, I was having a conversation with people, and the conversation was around video games, right? And storage, specifically in video game system, like video game system storage. And their argument was like, hey, people aren't going to download digital copies of video games because, you know, consoles and the like don't have the storage capabilities they need to back it up, is their argument, essentially, is what it was, right? Yeah, that was essentially their argument. Hold on, let me mute some of this stuff. Okay. Yeah, so anyways, back to what I was saying. They were basically arguing that physical copies of video games would always be around because the capabilities of digital downloading space for consoles wasn't there. And my argument to them is a funny thing happens over time, which is that technology evolves, right? So if you don't think we have the capabilities today, especially in terms of like storage, we're almost certain to have that capability pretty soon. If you look at how much power, if you look at how much storage power things had 20 years ago, it was freaking microscopic compared to what we have today, you know? And so a funny thing happens is technology evolves and it gets there, especially, you know, necessity is the mother of invention. And so if we need it there, if we need it to happen, we push it to happen. And I think we're going to see a similar thing with FSD, with driving. And I think, the question is when, you know, it's going to happen into the future. The question is when. You know, I would just give you guys this. If you think about how much strides AI has made in the past 2 years, imagine what it's going to do in 10, right? That's the thought process you need to have when trying to predict when full FSD is going to be here. And I think it's going to be here faster than people realize. But who knows, man? I don't freaking know. I'm just speculating, you know. Yeah, it was a ridiculous. Again, and I told it most of the time. I think they were just trying to justify GameStop's, you know, holding all price increases and stuff like that. You know, it is what it is. All right, chat. Again, Nasdaq's pushing up. It's popping up. Tesla up there too. Gold up there too. Right, exactly, 7.5. I think that's probably the best argument. If your eyes work in the rain, so will cameras. Eventually, right? Maybe not now. All right, we got about 700 people here. We still got 30 minutes, guys. 30 minutes. Can we break? I think we'll probably break 150,000. 151,000 is the first milestone over 150 today. Yeah. We've grown by thousands of subs in the last month, so thanks so much, chat. I certainly appreciate it. It is December. Look at the Nasdaq testing the highs of pre-market or close to it. Not quite there yet, but we'll see if we get there. Tesla pulling back. We got gold on the right. Let's put Nvidia up here. Nvidia still pumping. Slightly green on the day. Nah, it's starting to come back down. Yeah, I don't know what to do with my daughter, man. My daughter's got friend drama. She's got a little boyfriend. There's a bunch of drama going on. She basically found out that, like, her closest friend is being, like, kind of, like, super shady with her boyfriend and, like, telling her boyfriend all this negative stuff about her and, like, you know, just basically, like, not being a good friend. And essentially what I told her was that some people are solid. Like, you're going to have solid friends, right? And then you're going to have other people who are absolutely not solid, right? Usually the more insecure the person is, the less solid they are, right? And this specific friend doesn't ever really have any, like, guy interest in her. And so, you know, she's willing to kind of, like, hurt her friend to get it. And, like, you know, luckily her boyfriend, my daughter's boyfriend, like, sees it. And, you know, they're okay. But, like, it's just a bunch of drama I'm dealing with this morning. I stayed up late talking to her. And, yeah, it's just a lot of drama, unfortunately. It's a tough thing to deal with. But, you know, I remember being that age, man. It's a tough age, dude. Yeah, freaking snakes, dude. It'll come faster than you think, Solo. Nah, dude, and it's really funny because it's like a long time ago, I told her the same thing. I said, hey, that friend, I'm not going to mention names, but I was like, hey, that friend is not a good friend. She's weak. The word I use for it is weak. She's a weak friend. She won't have your back. She'll never stand up for you. She'll, you know, she'll turn on you if you give her an opportunity. She's just a weak friend. And she was one that was really struggling socially. So she's like a really insecure friend, really struggling socially, just a weak friend, right? And I told my daughter, I was like, hey, this kid's weak. She's not going to be a good friend. And I think my daughter kind of didn't want to see it. And fast forward 6 months, you know, and my daughter actually, she's like, you know, Dad, you were right. This kid's weak. And I was like, yep, you know, and I was like, you can treat that friend great. It's still not going to matter. She's still a weak friend. Not going to matter, you know. She's 15. No, the friend absolutely is jealous because she doesn't really have any male interest. You know what I mean? So she's one of those friends, and, you know, my daughter's little boyfriend is a good kid. He seems nice, but he's also a 15-year-old. And so, you know. No, exactly. It'll be like that for life. She'll never be trustworthy, right? No matter how good you treat her, she'll never be trustworthy. And that's, I think my daughter thought if you treat her well, she'll somehow turn and be better. She's just weak, right? And I think it has to do with her parents, in all honesty. Her parents are kind of like, they drink a lot. It's just a big mess, man. I won't go deeper into it, but yeah. Yeah, the standard I always use for friends is if they don't celebrate my wins with me, right? If they are any way resentful about me doing well, regardless of what's happening with them, if they're jealous, resentful, if they're not celebrating my wins with me, they're not my freaking friend, man. They're just pretending to be, you know? And that's the standard I keep, right? So if I hang out with somebody, I've hung out with people, and like, I've hung out with people that wanted to be my friends, where I've started to build relationships with people. The freaking moment I see them resentful over something happening, or something good happening to me, the moment I see it, I immediately cut ties and just ghost them and never say another freaking word to them, because I don't have time for that shit, you know? And you gotta be willing to walk away, you know? Yeah. %. My mom used to say, judge your friends' parents, not your friends. 100%. Yeah, it's a tough thing. Anyways, NASDAQ back up there at, you know, we have this little double top, although we did kind of break the top of this range. We'll see if it continues back up. Tesla at 378. That's a good standard. It's the only standard, I think, man. You know, I don't care about having more. Well, a funny thing happens when you get older. I don't care about having friends, bro. I got enough friends, dude. I really do. I don't need any, you know. Drake wasn't lying. You know? Y'all might be too young for that nowadays, huh? Or too old. No, I'm not gonna have it. I've got some active like swing trades going on, but they're probably gonna turn into long-term holds. Like I'm in Target right now. Target down a little bit, but we're still green. I'm in Coca-Cola right now. It's bounced up a lot the last few days, so you love to see it. Look at Coca-Cola popping up there. Really nice. You love to see it. I'm in Pepsi. You know, it's kind of flat the last few days. Hasn't really done too much, but it's down a little bit. I'm in AMD, which has done really nicely over the last few days, but it's now down a little bit. So we're mostly green on all this stuff. And then I'm in Bitcoin, of course, right? NASDAQ pulling back down. I don't know what I want to do here, whether I want to short the fade or whether I want to try to ride a bounce up there. All right, guys, we still got 20 minutes. 20 minutes. I start about 6 a.m. Anywhere between 6 and 7 a.m. usually, sometimes earlier. And then I usually stream until 10, 10:20, 10:30 market time. Eastern time. Oh, dude, I'm so glad I didn't grow up in the age of social media or in the age of, like, cameras, to be honest. I'm in Eastern Standard Time. Non-farm payrolls means exactly what it sounds like. It's payroll numbers. It's jobs that aren't farm related. You know, it's non-farm payrolls. Yeah, y'all hit the like button, chat. I appreciate it. All right, we got over 800 here. We still got 20 minutes left, chat. 20 minutes. Do me a favor, subscribe. Hit the notification bell. We really only need 70 subscribers to break 151K. And we're getting there. Again, the real question is, does the market react positively or negatively to higher payroll numbers, right? And I think it could go either way here, to be honest. I think it could go either way. It could go up from good payroll numbers. It could go down from good payroll numbers. If we look at the likelihood of rate decisions here, which I think is an important nuance of it. We got 12 days, less than 2 weeks, still at 68.5 to 31.5. So we're just going to call it 68.32 for this stuff. So 68.32. So we got time. And we'll see what happens here, chat. Almost there. All right, we're at 21.5s right now. 21.5s. All right. Gold target for December and it's 3,000. I think we'd have to have a lot of stuff happen for it to hit 3K. It's possible, but we'd have to have a lot of stuff happen for it to hit. You don't look old, John? Yeah, I mean, I'm not in my 40s. I'm in my 30s. Yeah, I'm in my 30s. I'm getting there, but, you know, I'm still young. Youngish. Depends on who you ask, right? If I ask teenagers, I'm old, you know. Last month's numbers were super freaking low, Kai. Super freaking low. I feel old, right? Like, I'm at an age where I don't feel comfortable. Like, again, I know some people who are still almost 40 trying, like, white suburban kids that are almost 40 trying to be actual rappers, you know, and I feel bad for them because they're posting videos and they've got like two views on their videos, and they're trying to be rappers and they're suburban white kids, but they're talking about like being the gangsterest gangster ever, you know. And again, I feel weird if I wear freaking Jordan 1s at my age, you know. I like Jordan 1s though, so I'll still wear them, but like, you know, we all get older. What I tell my wife is like, look, like my wife and I kind of chuckle, but like, we're not cool anymore. I'm definitely not cool anymore, right? Like the music I listened to 15 years ago, nobody thinks it's cool anymore, except for Lil Wayne. He'll always be cool. Don't you talk about Lil Wayne. But yeah, I'm not cool anymore, you know. And you gotta accept that as you get older, right? I think it's important too, because if you don't, you know, you turn into a almost 40-year-old trying to be a gangster rapper, you know. And we're not cool anymore. I'm definitely not cool enough to be a gangster rapper. All right, guys, here we go. Payroll data is 15 minutes. 15 minutes. We got about 1,000 people watching, so we'll see what happens. Yeah, my back hurts, dude. Get off my lawn, okay? Yeah, last month's numbers were crazy, shockingly low. Like crazy freaking low, to be honest. $20 years ago? Yeah, no, you're not lying, right? I don't know. 20 years ago, I was in my teens, you know. Yeah, I had some fun times though. I lived life. I had a good life, man. I did some fun. I had my periods where I acted crazy, and now I'm done with that, you know. Funny thing happens when you have kids is you stop trying to live crazy life and you just end up trying to, you know, raise good kids, you know. Can't be lower than last month. Yeah, last time we expected 100K, we ended up showing at 12K. So we're literally like 90%, almost 90% worse than expected for payroll numbers. And didn't the market react negatively? They dropped on November 1st. So let's take a look at what the NASDAQ did. If I can look back that long here on futures. They dropped on November 1st. So here's a daily chart. November 1st. Let me get rid of some of these levels. We got too many freaking levels on the chart. I'm going to have to draw some new levels, though, leading into this payroll report. So stick around. We're going to draw some new levels. I'll keep that one right there, though. So November 1st showed up right here. And honestly, considering the shockingly low payroll numbers, we didn't really react super negatively to it. I'm going to put a 15-minute chart up. See if I can go back that far. November, here it is. So here's November. This is November 1st, the day, right? So this is November 1st. Payroll data showed up at 7:30. So this is where payroll, so the market actually kind of reacted positively to the low payroll numbers last time. So here's the candle from 7:30. 15-minute period. We ended up dropping back down and then ripping back up, but the market kind of reacted positively over the following week or so from this report, which is really interesting. Really interesting. We'll see if it continues, but you know, I'm wondering if that's going to have a similar correlation today. Does non-farm payrolls mean more people employed? Yes. It means economic growth and more jobs. Like I said, Paul, like I said, Sam, it depends on who you ask, brother. You're not old. I'm not old, right? But if I ask a teenager, we're old, bro. It's all relative, dude. It's all relative. Yeah, dude, the other Yair is taking your place. Yair. You know, we don't need you here anymore, bro. We got a new Yair. He's cooler, you know. He's hotter. Yeah, let me backtrack a little bit. What I meant hotter, I meant hotter and like cooler. Like, he's really hot right now. Not in terms of, that just came across wrong. Yeah, sorry guys. John gonna be wearing Skechers shoes soon? Maybe. Alright, chat, 10 minutes. 10 minutes, we got over 1,000 here. Payroll data coming soon, chat. We'll see what we get. You guys ready? 10 minutes. Alright, here, so let's draw some support. I'm gonna put a couple support levels recently on the chart here. One of them is this level here. This level here, I'm gonna call it 2185s. A lot of different charts, a lot of different levels. So that's one level for sure. We have this big isolated high up here, and this is a 1 minute chart. We're gonna pivot to another longer term chart soon. So there's 3 levels we have on our chart. I'm gonna put a 15-minute chart up. And now we gotta look at a couple other big levels here. I think we gotta look at that. We gotta extend this one to the left. There we go. All right, so this is the levels I currently see. And I think these are fine. Maybe here. So this is the recent range levels that I've got on my chart right here on a 15-minute chart. We're also looking at the, yeah, there we go. All right, guys. Top 3 hottest ever. Napster life, yeah, for sure. Yeah, he's so hot right now, Zoolander. That's the context I meant it in, but, you know, hey. Any reason farm payrolls aren't counted? They have their own data release. They're just less influential. Yeah, it's all about how old you feel, bro. Harf, it's all good, dude. Welcome in. I don't know. I bought AMD. I'm still in it. Payroll numbers drop soon, guys. We got 8 minutes. We got really like 8.5 minutes left. This timer's a little bit early, but that's all right. Look at this drop. Look at the dip coming in here. Yeah, look at the drop coming in here. I'm trying to look at market news here, chat. And so again, a lot of people are asking, will a solid jobs report help markets? Average cash wages in Japan rose 2.6% year over year in October, the first increase since the peak in June at 4.5%. There have been various distortions like storms, industrial action, which exaggerated the weakness of the U.S. labor market, which does seem to be slowing gradually. So a lot of people say maybe the storms are going to cause a decrease in jobs. Euro, Swiss franc, sterling, Swedish krona, and the Canadian dollar in tight ranges, heavier bias. Yeah, that is the market right now. The slowing of ISM services was more than expected this week. Prices paid index edged up. Market boosted the chance of a Fed rate cut on December 18th to about 75% from around 66%. We're currently at about 68 to 69% chance of a rate cut, so almost 70-30. We expect the combination of the firm jobs report today. Or I'm not saying we expect anything. This is Seeking Alpha. They say, quote, we expect the combination of the firm jobs report today and a tick up in the CPI that will be reported next week will dampen speculation of a Fed cut, boost U.S. rates, and support the dollar. Essentially, the more hawkish stance by Seeking Alpha. We'll see if they're correct. I'm not sure. Imagine it's around 10K again and it pumps. Whew. If we're at 10K, I don't think we're going to pump. I think the market's going to freak out. You know, you never freaking know, but yeah. It's too political in nature. All right, guys. 6.5 minutes. 6.5 minutes. My timer's a little bit early, but that's all right. Again, hit the subscribe button, chat. Hit the notification bell. We're getting pretty close to a 51K. 151K, that is. We're almost there. Yeah, we need 50 subs, guys. Little 50 old baby subs. We got 1,300 viewers right now. Subscribe. Hit the notification bell. Thanks so much. We appreciate it. Get ready, guys. It's coming. I'm going to buy this dip. Quick little day trade. And if we get punished, we get punished. 3 contracts, 4 contracts. Flat. Give it to me here. Come on, let's do it. I feel like I'm playing craps right here. We're gonna have to cut it. Five minutes, chat. 5 minutes. Yeah, nobody freaking knows what's gonna happen here. Nobody does. All right, there we go. A little bit of an increase. Boom. There we go. We'll take it. You love to see it. All right, we're out. Nice little $30 gain quickly here. Now green on the day. We'll take it. Call it the bounce. A couple things made me want to buy that. A little bit of downwick action here. Definitely made me want to buy it. 5 minutes left, chat. 5 minutes. Subscribe. Hit the notification bell, guys. We got payroll numbers. It's a massive, massive report, to be honest here, chat. It's a huge, huge report. CPI report next week, too. Big data. Non-farm payroll data coming soon, chat. Coming soon. Again, unemployment expected at 4.2% here. Chat, 4.2%. We got 3.5 minutes. 3.5 minutes. Be ready. It's a funded account, 7.5. So yes. High or low numbers, Chad? High or low numbers? Good or bad unemployment numbers? What do you guys think? We got almost 2,000 people watching. I appreciate the love. Thanks so much. Let's see if we keep the growth up. Again, subscribe. We need 50 subs left. And again, if you want to know why we get thousands here, because we cover this quickly, faster, more accurately than everybody else. And we actually understand it versus a lot of people who are just jumping on the bandwagon of economic data that we kind of started the trend. So yeah, if you haven't already, subscribe, hit the notification bell. We appreciate it. Today is the biggest report of the week by far. Non-farm payrolls expected at anywhere between 202 to 215,000. Unemployment expected at 4.2%, chat. 4.2%. We will see what we get, but be ready. Hit the live button next to the play button. Make sure you're fully caught up on stream here, guys. Payroll numbers dropping soon. Let's see what happens. We got 2 minutes. Yeah, I'm not gonna talk about any individual people. Sorry, bro. All right, chat. 2 minutes. I'm thinking bad betting on it. I don't think taking a big position ahead of this report is very smart. No offense. I think the variance that we get from reports like this is super freaking high, and taking some big position is just a gamble. You know, I think you got much better edges elsewhere than taking up a large position ahead of economic reports like payroll numbers, brother. But do what you do, bro. Do what you do. Flat numbers. All right, here we go, guys. We have a short amount of time left. Short amount of time left. To be exact, we have... This timer's a little bit early. We have about 1 minute and 20 seconds left. 1 minute and 20 seconds. And so be ready, chat. Be ready. 1 minute and 20 seconds. I'm going to put gold up. We'll put gold up on the chart, and I'll put the SPY up on the top right. Here's gold futures. We'll put the SPY up here. We'll see what the market gives us here, chat. Again, they're expected at anywhere between 214 to 200 to 214K. All right, guys, 50 seconds. 50 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. I could put Bitcoin up. We'll watch Bitcoin after it happens. All right, we got over 2,000 here. Hit the sub button, and I'm pretty sure we just broke. All right, here's the report. 30 seconds, chat. 30 seconds. A little bit under 30 seconds, to be honest. About 22 seconds left. All right, be ready here. All right, 10 seconds, chat. Really about 12, but it's all right. 8, 7, 6, 5, 4, 3, 2, 1. Reports live. Payroll numbers 227, higher than expected payroll numbers. 227 versus 202 expected. 227 versus 202 expected. Higher payroll numbers. The market has originally had a huge upwick and a big move up. 227 versus 202 expected. Unemployment as expected at 4.2%. Payroll numbers higher than expected at 227 versus 202 expected, or 215 expected. Higher than both the expectational numbers here. Higher than expected payroll numbers again at 227 versus 202 expected here, chat. 227 versus 202 expected. We'll put this up on screen. Better than expected payroll numbers. Again, we showed 227K versus 215, 214K expected. Unemployment showed as expected. At 4.2%. There's the data right here. Top of the screen. Non-farm payrolls 227 versus 214. Unemployment as expected, completely flat. There you go. Now let me make this shrink a little bit here so we can fit it all. There we go. All right, so now it's all at the top. All right, guys, market has flown up. Look at this huge impulse move, a huge big move in markets here, guys. Look at that. All right, we got the data up on screen right now. Look at the big increase in the NASDAQ, big increase in everything. Gold falling down some here, though, chat. Look at gold. So gold coming down a little bit, market pushing up. Interesting here. SPY up big. So big increases everywhere here, chat. Big increases everywhere. Again, better than expected data report here. Better than expected. So crazy move here. We'll see if it can increases up at 21.5s for the micro NASDAQ. 21.5s. Look at this move here. We're about to break highs of the day again. Is this lifetime highs? No, not quite. Not quite lifetime highs. Lifetime highs are at 570. But the NASDAQ's heading up there. Wow. Payroll data's out. Higher than expected. Stronger economy than expected. Let's see if this influenced the CME watch tool now, chat. And I'm telling you, I cover it faster than everybody else. We covered that literally as soon as it dropped. We are at 72K or 72% chance, which is interesting. This is kind of counterintuitive to what you would think would happen here. 72% now for a rate cut. So even though we had a stronger economy than expected, the probability of a rate cut increased, right? So again, non-farm payrolls 227, private payrolls 194, higher than the 160 expected. The U6 unemployment rate came in at 7.8%. Unemployment rate came in at 4.2%. Canadian employment change showed up at 50.5K. We had European GDP show up as expected this morning. Average hourly earnings month over month for November showed up at 0.4%. Overall, a pretty strong jobs report here for markets. Pretty strong jobs report. Yeah. Up big, chat, up big. And again, we'll see if we continue here. MicroStrategy, yeah. Up big, we'll see if we continue here. We're at 21.5s right now for the micro NASDAQ. We got over 2,000 people still hanging out here. And again, we cover this all live for free. So if you want a one-stop shop for every economic data release that's important, subscribe.
We only need 20 subs to break 151,000. Do it now. Do it now. Hey, what's up, Rita? Rate cut is already baked in. Yeah, I think we're going to cut rates no matter what, right? Next week's CPI report. So again, stick around. We're going to day trade the opening bell live, invest in some stuff too. But stick around. So next week, the reason you should subscribe is because next week we have the CPI inflation report. Retail's most watched inflation gauge is next Wednesday. Expectations, I believe, are 2.6% for CPI, 2.6% year over year. I think it's like 0.3% month to month. Let me make sure, but we're going to cover that at 8:30 live like we always do as well here, chat. So again, next week we got CPI on Wednesday. It's expected at 0.2%. Core CPI is expected at 0.3 year over year. It's expected at 2.6. Core is expected at 3.3. And then Thursday, we have the other side, the PPI inflation metric. So one of them is producer prices business inflation, which is PPI. It's two sides of the same coin. CPI is consumer inflation, how much prices are rising for consumers. The Fed likes to look at PCE, the Personal Consumption Expenditure Index, and that's the week after next. So we got a lot of stuff coming out. If you want a really reliable person that covers all economic reports, subscribe, hit the notification bell. Also, chat, join our Discord, completely free. If we're going to day trade live today, yesterday we ended our 6-day green streak. If you want to day trade, I know I took way too long to transition from day trading stocks to futures. I thought they were wildly different. In the futures market, you can day trade the S&P, the NASDAQ, basically the SPY and Q price action, the Dow, the Russell, gold, some currencies, Bitcoin, micro Bitcoin futures. Patterns are super similar to blue chip stock patterns if you day trade indices, and there's no PDT rule in the futures market. There's less red tape. So Top Step is the most legit funded program in the world. They give you a demo and they test your skill with a demo account first. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, the base one is only $49. It's very cheap. It's $49, and most day traders lose. And so if you try to fund your own account, you're probably going to lose. But if you lose on Top Step, you're out $49. If you pass it, you get $50K in funding on the base one with a 90% split, and you get to keep your first $10K in profit as well. So it's kind of like the best of both worlds. It teaches you how to trade under pressure, limited risk, but 90% split plus if you get funded. So it teaches you how to trade. Great way to learn how to day trade, and they've paid out over $125 million since 2020. They're the most legit one in the world. I'll put the link up here if you want to help support the channel. Understand though, I'm the top 3 worst trader of all time. Do not copy me. I'm not an investment professional. I'm not liable. I have no freaking idea what I'm talking about here, guys. No freaking idea. If you want to check them out, I'll put the link up. Here's the link right here. Okay, Maddie, I know. Look, y'all are coming in here late. You're going to have to wait a second. Okay. All right, guys. All right, guys. Yeah, so NASDAQ's still pumping up on payroll reports. NASDAQ's still pumping up some here. Wow, look at this move. Yeah, that was my son. My son popped his head in here. You know, I asked my son what he wants to be when he grows up, and he says a freaking YouTuber. I'm pretty sure that's every modern kid, though. Every kid wants to be Mr. Beast and YouTuber. Who knows what's even going to be around by the time he's old, you know? All right, guys, so we're going to day trade live today. We're already green in this account, I'm pretty sure. And did we break 151K? I'm pretty sure we did. Yes, sir, we did. Nice. Hey, shout out to you guys. I appreciate the love here, team. Stick around, though. Again, we are going to trade live. Do we have any more economic reports today? Yeah, we got GDP. Oh, no. Okay. Last week was GDP. This week at 10 a.m. we got Michigan consumer sentiment data. So stick around. It's a big report. It's an important report. So at 10 a.m. we got Michigan consumer sentiment data. Gold pumping up now. So gold actually rebounding. NASDAQ testing highs of the day. SPY is up there as well, Chad. Look at the SPY. It's at 608 right now. 608. You know, I'm going to short this. It's one contract, very small. Might be dumb, and I'm pretty sure I'm going to get made fun of if it goes against me. But if it works, I'm a genius here, guys. If it works, I'm a genius. We'll take 2 contracts here. You know what? We got a cushion on the day. We can play around. Gold's starting to push up, which is counterintuitive, but give it to me here. Just drop. All right, you broke this high up there. You know what? I'm going to take a little risk. Definitely top 3 worst trader of all time ever in the world right now. Buying at the strongest part of the day. This is why I lock myself out of my other account every day. I'll give it some time though here. Honestly, it's small size. I think sometimes you get a little bit overzealous traders at the top up here. So it's kind of like, there we go. Yep. All right, we took, oh no, we just added. All right, whew, we're out. Locked in. 20 bucks. Locked in some more. Love to see it. Top 3 best trader of all time ever in the world right here, guys. And you can see how similar this is to day trading stocks, by the way. You can see how similar it is to day trading stocks. Again, if you want to check out Top Step, here's the link. Next report's at 10 a.m. Eastern. 10 a.m. Eastern. So your son would rather be a YouTuber than a trader? He doesn't really know what trading is, though. My son's 10. So my son's young. Like, he doesn't know what trading is. He knows what a YouTuber is, though. Does this non-farm payroll number mean that the Fed will be less likely to cut rates? Yes, less likely, sure. But it doesn't mean it's improbable that we're going to cut rates, right? So, like, does it change the percentages a little bit? Yes. Is it wildly outside of expected? No, right? Like, if you want these numbers to be, to change the Fed's decision on rates, it would have to be a lot hotter than it was, right? It was mostly flat. Let's be real. It's mostly flat. But it does show less of a need to cut rates. The Fed's going to bring interest rates down. When we say rate cuts, we're talking about the Federal Reserve bringing interest rates down. They only really do this if economic signs show weakness. Or they should, in theory, only do this if the economy is weak, right? If the economy is strong and looking good, they're less likely to do this. And so with higher than expected payroll numbers, what does that mean? It means a little bit stronger economy, and it means the Fed's going to be less likely to cut rates, although it's still probable that they're going to cut rates. Right now, it's still 70-30, so it didn't really change the percentages much on the CME watch tool, but just in basic logic, stronger economy, less of a need to cut rates. Fed made the huge mistake in 2007 of focusing on inflation, not unemployment. I mean, I don't know. I think it depends on how you look at it, right? So if you're talking about before the mortgage disaster, so here's Fed decisions, right? Here's 2007. The Fed started to raise rates in 2004. So this is where they started focusing on inflation. They took a hawkish stance. The problem, though, is that, like, nobody's ever going to win, right? Like, the issue that people have, right? Like, there's a lot of bias floating around. Like, people want low rates, right? But you should only really cut rates. And again, like mortgage brokers, lenders, real estate agents, they all want low rates in theory. Why do they want low rates? They want low rates because it's easier to sell houses and lending and loans and mortgages and all this stuff when rates are low. Mortgages are a little bit less dependent directly on rates, but in this situation leading up to 2008, we did have a hawkish stance. But the hawkish stance by the Fed is not what caused the mortgage disaster, right? What caused the mortgage disaster is too much spending, too much greed by mortgage companies, adjustable rate mortgages, consolidated debt instruments, and like all kind of crazy mortgage fraud caused 2008. CDOs, consolidated debt obligations, like all kind of craziness. Like ninja loans, which I mean like no income, no job loans, right? Is what they were called. And again, like there's a lot of fraud that happened. Basically, lenders getting greedy is what caused 2008 versus everything else, right? Lenders getting greedy is what caused 2008. And so, yeah, a hawkish Fed, and again, you know, and to a certain extent, like, look, this probably sparked it, right? So I'm not going to say the hawkish Fed caused 2008, but them being aggressive in their rates here probably stroked the flames a little bit. Why? Because you got to think about it like this, right? So if what caused 2008 was mortgage greed, people getting all these different houses with adjustable rate mortgages, and adjustable rate mortgages are directly influenced by Federal Reserve rate decisions. Like mortgages are influenced by them in a longer term, less direct way. But what these rate decisions directly impact: home equity lines of credit, adjustable rate mortgages, because the adjustable rates are rates that they use are the rates, right? So what are the adjustable rates that are changing are, you know, the rates that we get. And so if the Fed turns hawkish here, a lot of people are going to start defaulting. Now, can we blame the Fed for being hawkish here? I don't necessarily think so. I think, you know, you have to combat inflation because I'm biased. Look at this support level hold, though. We called this support level. Look at that thing. We bounced literally directly off of it. I'm biased, but you know, guys, like $100,000 used to mean something. I say this a lot, but 100K used to mean something here. We should all fear inflation, right? Like I would rather us go into a mini recession and have price stability versus have this crazy bull run in which pretty quickly 200K is not going to mean something. 250K is not going to mean something, right? Like I would rather go into a mini recession. And of course, lenders, mortgage brokers, real estate agents are going to be unhappy, right? But it's not always time for some thriving bull market in real estate. Like that's not a reasonable expectation, and we can't pander to them and cause problems for everybody else in inflation, right? And I think that's the lens you have to look at it under. And so, but it's nuanced for sure. Gold coming back down, SPY coming back up. Strong economy, let's cut 50. I think you got it backwards, Harris. So the stronger economy we have, the less we need to cut rates, right? You know, it also depends on inflation and a couple other things, but the stronger economy we have, we cut rates when things break, when the economy is weak, right? Like if payroll numbers came out super weak, it's much more likely we're going to cut rates. I think we're going to cut rates no matter what in December. But examples of this, 2007, right? 2007 mortgage disaster happened. And what did we do? We dumped interest rates. We brought rates to almost zero afterwards. Why? Because we were trying to save ourselves from the upcoming recession. You know, so again, you can kind of see the interest rates dump here. Like if you look at the actual chart, look at the interest rates. Here's 2006. Mortgage disaster started to happen around mid 2007. Boom. Crazy drops. We brought interest rates down to almost zero, and we maintained them there for a long time. And so, like, if you want to know why everybody's so used to 2.5% mortgages, and these are indirectly influenced by rates here, everybody's used to cheap money and loans. This is why, it's because rates were almost zero for a freaking decade, you know? And so when we pop up to an area like we are now, which is not objectively high, like it's not like interest rates are super high relative to like a big picture look at the graph, but people are still so used to 2.5%, 2% that, you know, they don't like them at 5 or 6%, you know, and the same thing happened in 2020. Like the Fed, we had 2020 happen. Look, here's literal 2020s right here, right? What happened in 2020? We brought interest rates down to almost zero, and we kept them there for a much smaller period of time, right? Because we brought interest rates down to almost zero. A funny thing happened. We started doing quantitative easing, printing money. Quantitative easing is expansion of the Fed's balance sheet through bond purchases that they buy from creating online bank reserves. And so that the QE mixed with stimulus checks, mixed with low interest rates, made inflation spike up to almost 10%. So then the Fed played catch up and they raised rates aggressively. And now we're here. And then we finally started cutting rates a couple months ago. But the Fed does rate cuts when the economy is, in theory, weak. And so, yeah, the point is if payroll numbers were stronger, it honestly should mean less likelihood of a rate cut. But I still think a rate cut's pretty probable regardless. Unless inflation shows up. Like if inflation shows up super high next week, that might mean, there's a chance we pause. But we'll have to wait and see there. Gold's starting to test lows. We're finally getting a little dip here. This support level we drew earlier is certainly holding nicely. As a foreigner, I think y'all in the US have an inflation problem. I mean, the problem with inflation is from the last 5 years. So currently inflation's at a reasonable level. And again, I say this every day. I'm trying to help people understand economics, right? And so when I say inflation is at a reasonable level, I'm sure just me saying this, especially since it's an election year, some of you guys that don't pay attention to the stream very much, some of you guys are going to be like, what? Oh, you're going to scoff at me saying inflation's at a reasonable level. The inflation that's really getting us is the last 5 years. Right now, inflation's only, 2.5%. But inflation doesn't go down. Prices don't go down once they go up. Once they go up, we're stuck with them. And the only thing we can do is slow it down to a level in which we can play catch up with it moving forward. And so inflation spiked up to 10% in 2022. The Fed took a very restrictive, hawkish stance, restricted the economy, pulled inflation back down to a point in which it's now reasonable. It's at 2.6% is what's expected at next week. But rates don't go down. The best we can do is slow them down, And so we'll have to wait and see, but yeah. The real reason people are unhappy, the economy's relatively strong, but the real reason people are unhappy is because of the inflation, like prices. Prices have gone up so much in the last 5 years that people are just genuinely unhappy. People are paying 2, 3, 4, 5x more than they did. And now, even though inflation has slowed, we're still dealing with those high prices over the last 5 years. And that's really the reason people are unhappy. And it's also a reason people think we're in some super weak economy when we're not. So I hope that makes sense. He can't, Jeffrey. So the Federal Reserve is not a government entity. So he can't. He can pressure. He can put pressure on and indirectly make it happen. But he can't directly do it, no. And if you listen to Jerome Powell will tell you the same thing. He can't directly... he can't directly do it. Why? Because the U.S. government and the Federal Reserve are two completely different entities. They're independent of each other. They're related, but they're independent of each other. Basically, politicians can't control the Federal Reserve, and the Federal Reserve cannot control politicians. I appreciate the donation, though. Thanks so much. Fed needs to raise, but they're already cutting. I don't think they need to raise, too. We should only raise if the economy's showing super weak signs. Or, opposite. Sorry. We shouldn't raise either. I think we should pause, personally. And again, this is counter, I just bought a rental property, right? Literally just paid for it, in the last 3 months, right? And so it's actually better for me personally if rates go down. Right? I would rather low interest rates, because if we get low interest rates and it takes a little trickle effect into next summer, we might have a thriving real estate market with lower interest rates than we did this past year. That might make house prices go up more, and that benefits me, of course, with my rental properties. But it's going to be worse for inflation problems, right? With lower interest rates. And so personally, I'm okay with pausing. But at the same time, the Fed's goal is to identify weakness in the economy and stay on front of it. The issue with keeping a restrictive hawkish stance like we had over the past year and a half is it's kind of like picking up pennies in front of a train track. Eventually, you can get into trouble if you keep it there for too long. If you do it for too long, eventually you get into trouble. And so, I'm okay with another pause, but I think we'll cut. I think we'll cut in December. I think they're pretty committed to cutting already. And if you listen to Powell on Wednesday, he seems pretty neutral. I think they're going to cut, personally. Yeah, again, sorry guys, I'm just not gonna I've always had a disclaimer, but so I paid for it up front, Ryan. I'm not going to be too specific about everything else. But again, real estate makes sense long term, right? Like short term, I told like my wife this too. Like short term, anything can freaking happen, right? Like prices go up, they go down. Long term, prices are going to go up. Long term. At least at the place where I bought this property, prices are going up long term. Short term, anything can happen. But let's just put a number, and this is not what I paid for it. Let's just put a number up at 300K, right? So 300K, real estate appreciates about 4% a year. So in 10 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, that property is going to be worth about 450, right? And rent will increase in a similar amount because the more the house is worth, the more I can ask for rent. Right. And so over time, my rental income will increase as well. So there's a 1% rule, meaning you should charge 1% per month in rent. We can't quite get that in modern age, but we'll call it $2,500 a month for that. And so times 12, about 30K net or 30K gross income from the property a year. Let's take half of that off for expenses, insurance, taxes. And we're netting about 15K, a year, but this will increase the same amount, about 4% a year, right? And so, we're gonna profit from appreciation on one end, with just the house price increasing, and then we're also gonna profit on appreciation of rental income over time. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So in 10 years, I'm gonna earn about $22,000 a year in net profit from it, and this will continue to grow. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 3 years, 32,000. Or in 20 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 30 years, and so forth and so forth and so on. So it'll keep up with inflation, and you'll most likely profit from it, right? So if you look at the percentages, real estate investing makes sense. It's just a lot less passive than like stock investments. You could also buy real estate investment trusts or something like that, but everybody's different. All right. So he does not have the direct authority to fire the FOMC chairman. So the Fed chairman is designed to be an independent, or the Fed is designed to be an independent institution. Its leadership is not subject to political whims. He can be removed for cause under the Federal Reserve Act. For cause is typically interpreted to mean misconduct and some other stuff, and I don't think Jerome has had misconduct. I know he's political. Wasn't Jerome appointed by let me see. Powell was appointed by the current president. Oh, yeah. So when the same president today was elected in 2016, he appointed him. He appointed Powell. You know, so like, I don't know. Well, okay, so yeah, so he was actually appointed. So Obama appointed him in 2012 to the Federal Reserve in general, right? Just we see some disparities here in chat, arguments in chat about who appointed who. Obama appointed him in 2012 to the Federal Reserve, right? To the committee. But Trump confirmed him and appointed him as chairman in 2018. He began his term as chair on February 5th, 2018. Just to put that into perspective, right? So pretty bipartisan is my point here. And again, Powell's a tough job, man. It's really easy. Like, I'm very neutral politically, but $200K a year, that's a tough job for $200K, man. Yeah. All right, guys. Hey, we are going to get ready. Stick around. Yeah, so we got the big day trading. We're going to be day trading at the opening bell, guys, so stick around. All right, chat. Yeah, we got U.S. payroll numbers are out. We showed up higher than expected, stronger than expected. The market is still somewhat green. The SPY is very green. Gold is pretty much flat at this point in time. So gold is pretty much flat. Yeah, not a lot of craziness happening. All right, so we had the NFP news live. We had the NFP news live. The Fed chair, realistically, traders. You are the best. Hey, thanks so much. Yeah, Powell's a tough job, man. If things go good, nobody gives him credit. If things go bad, everybody points the finger at just him alone. Even though the Federal Reserve is made up of multiple different members and voters, the Federal Reserve is kind of like a bank that can makes policy and it's the bank to lead all banks. You know, it's the bank to lead all banks. In the land of America, where the markets lie, one chair to guide them all beneath the watchful sky. Jerome Powell, the steady hand with policy so grand, at the helm of the reserve, to oversee the land. One bank to lead them all, the Fed so wise and old, to steer the nation's fortune with rates both low and bold. In the boardroom of governors where the decisions lie, the Fed shall bind them all as the world keeps an eye. To print or to tighten, to inflate or to stall, Jerome Powell's whispers echo in chambers that enthrall. One policy to rule them in markets far and near. The Federal Reserve, the power that we fear. AI is so fun, man. AI is so much fun. You're welcome, guys. I'm gonna start charging you guys for stuff like this. Anyways, the SPY up there is at almost 608. 608. Yes. Pawn. That's exactly Mama Pawn. That's exactly what I did. I said to make me a Lord of the Rings parody. One bank to rule them all. And it hit me with the greatest poem of all time. Definitely top 3-ish. John, what do you think about MicroStrategy? MicroStrategy is going to do well as long as Bitcoin does well. And I think Bitcoin will do well, you know. Yeah, so thanks so much, guys. We did break 151K. I appreciate it, man. We're growing here. Honestly, I'm excited. We still got 1,000 people watching here. We're going to be day trading the opening bell completely live on stream for free, like we always do. So stick around, chat. Stick around. Here, let me do another poll here. I think we had non-farm payroll stuff out. Let's do another one. Do we cut rates on December 18th? Yes. No. John's cool / see results. All right, there you go. Vote on the poll here, chat. Let me know how you feel. Congrats. I remember when you were left and have that. Yeah, I mean, again, we graduated to economics. And so like today at payroll numbers at 8:30, we had 2,700 viewers, almost 3,000 concurrent viewers. When Jerome Powell spoke on Wednesday, we had almost 8,000 concurrent viewers. It was honestly one of our largest streams we've ever done. It's probably like our 3rd or 4th largest. The largest stream we've ever done was a Jerome Powell speech in which we had like 14,000, 15,000 concurrent viewers. Crazy numbers, to be honest. The thought of that many people, like I'm from Baton Rouge, Louisiana. It's got a population of what? It's got a population of like 220,000. We'll call it 200K to make my point though. So to think that we had like 10% almost, maybe like, to think that we had like 6 or 7% of that whole population of Baton Rouge is fun. Watching them stream at once. In total, we got like 50K views. So if you want to go by that number, our largest NVIDIA earnings stream, we got like 100,000 views. So to think that we got like almost 50% of the population of Baton Rouge, you know, that's a cool thought concept. Top 3 greatest channel of all time ever. You're the most reliable Fed stream. Hey, thanks so much. You said it yourself a few months ago that the CME tool isn't wrong. It depends on your definition of wrong, right? So the CME, if you look, I'll put it this way. If you look at the Fed Watch tool 20 minutes before the Fed decision, that's almost certainly what is going to be the outcome, right? But if you look at it weeks or months beforehand, in that regard, it's certainly not always that. It can change leading up to the report. And so it depends on when you look at it. If you look at it right before the report comes out, it's pretty freaking accurate, you know? And it's one of the reasons, like, I kind of scoff at people where it'll be like, hey, we got a 98% chance of a rate cut 15 minutes before the FOMC decision. Yeah, you got all these people who pretend to understand economics in chat telling me that we're gonna pause or we're gonna raise rates. We're gonna do a rate hike, right? Like, I think what happens is like a lot of day traders and a lot of penny stock traders and meme stock investors, they've started to watch economic data based off of like watching my stream, for lack of a better word, seeing me get views. And so they kind of want to parrot that type of stream, but a lot of them just don't really understand it. They don't really understand economics. Some of them are calling everything a rate hike, whenever a rate hike is a very specific action by the Fed. It means they're raising interest rates. And a lot of them just don't understand it, but they just want to piggyback off of it. And so they start covering it. And the problem when they try to cover it is that they don't freaking know what they're talking about half the time. Like, they don't know what a lot of this stuff means. They don't know what a rate hike is. They're just kind of piggybacking off of it. And I think one of the reasons we get so many viewers for this is because people actually understand. Like, we know what we're talking about here. Like, I might be wrong about different stuff, but we know how to predict what's going to happen. Top 3 greatest ever. I might be tooting my horn just a little bit too much here. Top 3 best ever, most handsome and most humble person in the world right now. When you look this good, you know, you really try to be humble. But, you know, when you're just this attractive, humility just kind of happens, I think. You know, like, being this good looking makes you humble, I guess is the point I'm trying to make here. But on a serious note, tune in, watch us, because half these guys don't know what the freak they're talking about. Anyways, if one has money in a brokerage enough to purchase a house outright, is a mortgage better or paying full price outright and have less money invested? That's a very, very, very subjective thing, Jeffrey. That's kind of like asking me, is chocolate or strawberry ice cream better? Right? I'm going to go with chocolate, personally, because chocolate's much better to me. But some people are going to go with strawberry. And like, it all depends really on your specific situation. Some people do something like this, where they buy a house outright, and then they treat that house like a bank. So if they ever need money, they can refinance and get money, right? You're also going to pay less taxes on something like that. If you get a mortgage, you're going to pay less taxes, and you're going to have a little bit of tax advantages. But you're also going to be paying more interest, obviously, usually, versus if you actually own the house and refinance or whatever. So it depends, right? And that's a market that I might not know as well. Personally, I don't like debt, you know, but some people love debt and they use debt to profit and make money. I'm not one of those people, though. I don't like taking on massive amounts of debt. You know, I would rather just invest, own it, you know, and you can, okay, it's like this, right? So think about it like this. The reason a lot of people get rich in real estate is because I'm going to show you guys like a lot of people's plan with real estate. Okay, so say you get a mortgage for let's do the same thing, a $300,000 property. Let's call it $400K just to switch it up a little bit. Say you get a mortgage for a $400,000 property, right? And let's say on that mortgage, let's say you're paying $2,500 a month, right? Inflation's going to happen. And so in 10, 15 years, right? Let's call it 10. Inflation's going to happen. And so what's going to happen in terms of your buying power is that inflation goes up, let's call it 2.5% a year. So what's going to happen to this $2,500 in buying power over the next 10 years is that inflation is going to make this less significant for you, right? It's another reason why inflation is a good thing for some of the national debt that we have. Over a 10-year period, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, your mortgage being $2K or $2,500 is only going to feel like about $2,000 because of inflation. In 20 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's going to be about half of what it originally felt like. Not only this, but you're also going to be slowly paying it off over time. Slowly paying it off over time. And so there's a strategy in real estate called the BRRRR method. And this is exactly like precisely what they profit from. It's buy, renovate, rent out, refinance, repeat. All right. Buy, renovate, refinance, buy, renovate, rent out, refinance, repeat. Right. And when you do this over time, inflation is going to wipe out some of that debt, as well as you're going to slowly be able to pay off each different property's rent. And so over time, you'll own more equity in real estate, as well as inflation will kind of slowly wipe out. As long as it's not adjustable rate, inflation will slowly wipe out what you're paying for it over time. And so, you know, that is all with the assumption that you're going to earn more money over time as well, and that's not always the case. So just take it with a grain of salt. And I'm not also recommending you do this because I'm not the type to do this necessarily here. I think there's pros and cons to it, and it takes a specific type of person that has discipline to do it. Yeah, so I hope that all makes sense. Not investment advice. I have no freaking idea what I'm talking about. Not an investment professional. Don't copy me. Don't sue me because I have no freaking idea what I'm talking about here, guys. Don't copy me. Blah, 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 blah. Don't sue me here, chat. I'm trying over here to help you guys. Again, I always try to disclaim everything because certain people can get themselves in trouble doing exactly what I just said, right? It takes a very specific type of person, and that's not everybody. If you want to help support me, again, check out TopStep. TopStep, great way to learn how to day trade. Most day traders lose, and so, you know, it's a cheaper way to learn how to day trade, and you're still probably going to lose because it doesn't matter where you go, what course you take, who you follow. Most day traders are about to lose. So you can either deposit thousands of dollars into your own account and lose it, most likely, or you can try a funded account program. If you lose, you're out $50 for the base one. It's not the end of the world. If you pass it, you get a $50K funded account with a 90% split. To pass the test, it's a 2 to 3 ratio, so it's a pretty reasonable ratio. There's no PDT rule in futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell. TopStep has paid over $150 million since 2020. Crazy number. Been around for over 12 years. Here's the setup. It's $50 a month. You got to make $3K in profit without losing $2K. 5 contracts, which is plenty. You don't even need 2 contracts to do this, really, if you're talking about regular E-mini contracts. Again, just a great way to learn how to day trade it. In the futures market, you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold. Patterns are super similar to blue chip stock patterns, and there's no PDT rule. So it just makes sense. And I think most day traders lose regardless of where you go. It's a lot cheaper and more risk averse to do it here. But I'm biased because they pay me money, for lack of a better word, but genuinely useful, in my opinion. If you want to check it out, confirm it all with them first. Again, understand the disclaimer we put up. And if you want to check it out, here is the link. I heard some people say houses will be one of the good investments against inflation. I think it depends. I didn't really trade Davey the 830 release. That's a gamble, bro. I'm not going to buy anything at 830. We're going to trade the reaction to it here. And we did make a little bit of money today so far trading the lead up to this report, but we haven't taken a trade since the report. We still got 13 minutes. I'm being very selective with my trades. I had a 6-day green streak day trading, and I'll break the strategies, patterns, and all that stuff down live on this stream after the opening bell as I do them, right? But one of the reasons I had a 6-day green streak is because I locked myself out on TopStep X. And on TopStep X, if you do sign up to TopStep, 0 commission on TopStep X, 74 cents in fees per contract, tiny amount of fees, 0 commission, the biggest edge in funding in my opinion right now. But yeah, I'm not going to gamble taking a huge position simultaneous with the payroll report. That's dumb. Anyways, back to what I was saying. Somebody saying, hey, buying real estate's a good inflation hedge. Any investment you can think of, the goal of it is to hedge against inflation. If you buy gold, inflation hedge. You buy real estate, inflation hedge. You buy the S&P 500, the NASDAQ, the Dow, inflation hedge. Right? Some of them are better or worse, more passive, less passive, but the goal of these is to hedge against inflation, because if you sit on cash long term, I've shown this formula a lot. Let's say you got 100K. And let's say inflation grows at 2.5% a year, right? In 10 years, that 100K, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, is only going to be about 23%, 22%. It's going to feel like 22% less. In 20 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, it's going to be 40% less. It's going to feel like 40%. In 30 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, you're going to lose about half your buying power on your cash. And so you get some people that are like, oh, I don't trust the stock market. You know, you could trust it, not trust it. If you don't invest in something, this is going to happen to your money over time. You know, the point of spending your money, guys, and a lot of people buy Lamborghinis and all this nonsense. The point of spending your money is to invest in things that go up in value, not down. There's a lot of things that go up in value, a lot of things that go down in value. I talk about Rolexes a lot here because if you look at a watch graph, again, Rolexes, they go up in value. They keep up with inflation to a certain extent. Not fully, but like, look, here's a Rolex graph. Just to put this into perspective here, chat. Here's a lifetime Rolex, or here's a Rolex graph since they started looking at charts. This is since 2017. So this is an 8-year Rolex graph. Look at the graph here. And again, personally, buying the dip makes sense too. So Rolexes are interesting because people assume they're flushing money down the toilet when you buy a Rolex. Rolexes appreciate. They go up in value, not down, usually. So, I mean, they can go down, like we're on a dip phase now, but we're up huge since 2017. You know, they've basically doubled in value since 2017. So if you bought a Rolex here, you've almost doubled your money since 2017. Right? Now, I'm not telling you to invest in Rolexes, but what my point is, if you want to spend your money, Rolexes are cool because you can buy a really nice watch, you can wear it for 5 years and probably make money wearing it. Get paid to wear that watch, basically, right? That's a cool concept, I think. Now, diversification is what you want to do, though. Diversification is king, so diversify. I'm not telling you what to do. I'm not an investment professional. I have no idea what I'm talking about. Don't copy me. Don't sue me. I have no idea what I'm talking about. But diversification into all these different things is the way you stay safe, right? If you diversify a little bit into stocks, real estate investment trust, if you want, you know, crypto, NASDAQ, S&P, Dow, Apple, Tesla, you know, Rolexes, whatever you want, like gold, silver, platinum, you know, chances are you're going to make money over time. And again, it goes back to buying stuff that goes up in value. You know, one thing that doesn't go up in value? Penny stocks. They're almost certain to not go up in value. And so don't crap your money away with penny stocks either, guys. Don't fall for it. Most of them fail. Don't invest in them, you know. Michelle Bowman, one of the Fed members. All right, guys, 9 minutes. I bought a knockoff Rolex for $80K or for $80 in New York City. No, it doesn't count. That's a bad fake too. They have what's called super clones that cost about $1,000 that are they're virtually identical to the real watches. The only way you can really tell the difference is you open up the back of the watch and you look at the movement. A real Rolex will have it'll have a free standing balance. So it's not going to have a bunch of attached balancing arms to hold it there to keep it balanced, you know, and that's really hard to replicate. And so that's outside of that, it's virtually impossible to tell the difference unless you really, really have a good eye for them. They're called super clones, and people scam people with them all the time. And the worry I have with Rolexes, though, is that if those get better and better, eventually they're going to figure out the balancing act of it too. And what does that mean for Rolex prices? Life insurance for investing, there can be good and bad ways to do it. It's just as is many things in life, it depends. All right, chat, we got 7 minutes left. 7 minutes. Be ready. Stick around. Thank you guys for helping me break 150,000. I appreciate it. Again, we're going to stick around. Day trade live at the opening bell. Be ready. There we go. We got this big support level here, though. It's almost too easy, and the market has slowed down dramatically since payroll numbers came out. So they came out, and they've slowed down dramatically here. Dramatically. I'm just realizing the text at the top of my screen. right, so analysts expected 214K, but they showed 224K. Instead, unemployment showed up as the expected 4.2%, guys. So unemployment data was flat. We now have Michigan consumer sentiment data at 10. And this precedes next week's CPI reports. Be ready. Watch us day trade live at the open as well. There you go. Data was slightly stronger than expected, slightly stronger. Yeah, I saw a fake so good on Rolexes that it got me nervous, and I had to crack open the back of mine just to look deeper at the finish, balancing, and everything like that. Luckily, both of, you know, the ones that I have are real. But all right, guys, you ready? All right, so still heading up. We're at 21.5s right now, chat, for the micro NASDAQ. 21.5s. We're waiting for the opening bell. We got 4 minutes left. Chat, 4 minutes. Again, thank you guys so much. We're growing by thousands of subscribers a month. Thousands. Oh, man. Flash crash yesterday. I think people are just waiting for payroll numbers. I don't know what caused the big drop in Bitcoin, to be honest. But I'll have to dig a little bit deeper into that. Oh, yeah, you're right. It showed 227, didn't it? Yeah, you're correct. Thank you, sir, for telling me. I put 224. It's actually 227. You're right. Thank you, sir. All right, there we go. It's fixed. Yeah. Yeah, you know, I was always worried to switch back to OBS because I thought it would look less professional, but I think the way I've built the stream, now it's actually better, right? Like, this looks better than it did on StreamYard, right? Much more professional. Just looks better. We got see-through, we got green screen, we got all this good stuff, so we're on it. Looks good. Good. Yeah, AMC hit another offering, guys. I did see that news. So AMC offering, I did see that. Let's talk about it. So AMC entering into a 50 million share sale and registration agreement. Goldman Sachs LLC. You know, offering, filing. That's a bad sign, to be honest. What this means is that AMC is trying to make more money. Honestly, the market is reacting pretty negatively. Like, to put this into perspective, right? So if you don't know what this means, okay, offerings, there's multiple different types. Okay, offerings means one thing: dilution. It means they're selling shares. Okay, it means they're selling more shares, they're diluting their float, they're adding more shares to the float, making each individual share worth less. It's dilution. All right. Companies do offerings typically when they need money. and when they're struggling. If a company's struggling more and needs more money, they might do offerings, right? And so because of that, because it's dilution, it's bad for shareholders, as well as it's a sign of weakness in the company in general. Typically, offerings make stocks react negatively. And so you can see AMC was at 530 before this, dumping down to 470s, 480s right now. So yeah, bad sign for AMC, not a good sign. And again, like, regardless of how you feel about AMC, Roaring Kitty made a post over the weekend. Regardless of how you feel about AMC, GameStop, even though I think AMC has a more steady business than GameStop, GameStop's more primed to make a big run, in my opinion. AMC, the float's too large. They've done too much messing with it. They had their ape shares and dividends and all kind of craziness for AMC. The problem is that it kind of piggybacked off of GameStop's memes, short squeeze stuff. You know, the real issue I have with all this stuff is that so many people, everybody and their grandmother is sitting here trying to grow a social media account based around AMC on X and some on YouTube, right? And so what happens is, like, it's confirmation bias. They're kind of pandering to people, for lack of a better word. They're out here. There's the opening bell, guys. Sorry, I'm missing the opening bell. Market just opened though, so we'll cover it. All right, so there's the opening bell. I'm gonna wait 5 minutes until the open anyway. Nasdaq's popping up a little bit, bouncing right at the 200 exponential moving average. So let me put Nvidia up. Nvidia's shooting up a little bit too. Nobody user. Nobody's paying attention to what you're saying, brother. No offense, you know. Market's been pretty flat anyway. Nvidia coming down now, 144s. Yeah, I don't think the Hawk Tua girl is helping crypto at all. All right, Nasdaq pushing up a little bit, bouncing right at that 200 exponential. Yeah, no offense to you, user. It's all good, bro. But I get people here, and like, everybody wants to act like a market expert, and I'm not saying you're not one, okay? What I'm saying is that, like, when the market's in a tight range, I can say, hey, guys, you should sell. And then if the market drops a tiny, tiny amount, I can be like, see, you should have listened to me, right? But it doesn't mean, like, it doesn't really mean anything, man. And you shouldn't look for validation through the, like, you shouldn't try to be a market expert on YouTube, you know? It's all love here, bro. It's all love. Coming from the top 3 worst investor trader of all time. That's all I'm saying. All right, so market's pumping up since the opening bell. Now we're getting ready to hit the highs. Bitcoin almost back to 100K. All right, Nvidia pushing up at 145s. Look at Nvidia shoot up here, guys. Payroll numbers came in hot. Market's going up now. Look at this. All right, we're pushing up towards highs. I'm going to wait 5 minutes to pass before we trade, to be honest. We also have the Michigan consumer sentiment data I forgot in about 25 minutes. Where's Bitcoin at? Bitcoin at 99.4s. Definitely a lot of strength coming through, but it's almost too obvious, I think. So sometimes when it's too obvious like this, we actually come back down now. Because of that, I'm just not messing with it. But if I'm wrong, if it does break, it's higher chance of a big break, or it could be a liquidity grab. But what a liquidity grab means is that like something pushes up, breaks a really big level that people are watching for, and everybody starts to buy it up here, and then it dumps down, grabs liquidity, kind of squeezing them out and then dumping back down. It's called a liquidity grab. What's your take personally? Is everything overvalued? Maybe. I don't know if it's overvalued. I mean, I think that we're up a lot over the last 2 years. We're up 50% in indices in the last 2 years straight. So I think we might have a little correction next year. Doesn't mean we're going to crash though, but I think balance is big, and we need to balance out a little bit first. Bitcoin pulling back some now at 99K. Is my stream still working, dude? YouTube just like cut out. Weird. Did anybody see that? That was strange, dude. All right, look, a liquidity grab up here so far. It broke highs and then it fell back down. I'm gonna short this. We're 5 minutes after the opening bell. We're taking one contract only, and we're already green on this account on the day. All right, we got 2 contracts here. We got a pretty large cushion already. I just want to see if we start flushing down some. We took one off. Yeah, it's too much that we're going to break highs up here. So we lost 30 bucks. We're still green, but not as green. Will gold still fall? I don't know, guys. See, we broke highs again, but it's looking more like we're gonna run up. We have this. I'm trying to see what the lifetime highs are. Sometimes those can be like a magnet, and I think that's what I missed here. Lifetime highs are at 567s. 567s. So we still. This is the all-time highs. So we're getting close to it. You just got to worry about liquidity grabs up here, chat. All right, we got 2 contracts now. 3. All right, so we just scalped a little bit. Nvidia dumping down quickly here too. Yeah, there's the liquidity grab. Nvidia coming down too, though. Look at this. So we're getting drops in Nvidia. Yeah, we're just gotta wait it out. I don't see anything I really like at this point. We're too close to highs for me to be interested in shorting, but we're also too extended on the upstairs for me to want to go long. And I know Top Step changed the payout rules, but I think you guys got to understand, Top Step's the most legit one in the world, man. They really are. And like, I think a lot of what Top Step is doing is like, I think some of the other firms are kind of making the whole industry look bad. Like they had one that got closed. And so I think, you know, you got to understand, Top Step's trying to stay on the front of policy change, right? And they're trying to help the whole industry. And it's important to people understand, like, that's where some of these decisions are coming from, I bet. And that's a good thing, right? Like, you want Top Step supporting the industry in that way, because without it, you know, it's just important for people to really recognize that. All right, so we broke highs again here. It's too tough to tell which way. Nvidia's still falling down some, right? Bitcoin's still up there. I'm going to look at Apple, because Apple's been close to lifetime highs too. Apple's starting to rebound. It is Friday, though. We do have Michigan consumer sentiment data today. I completely forgot about that. We do have Michigan consumer sentiment data at 10 a.m. So we'll cover that when it drops too. Yeah, I think we're around lifetime highs. I think sometimes those numbers can act as like a magnet, if that makes sense. Right, for sure. And it's not that, like, you can do 5K, get another 5 winning days, do another 5K, do it, get 5 winning days. You know, and again, I think you guys got to understand, they're trying to stay on the front of policy, and I think that's good, right? Yeah, so it's Michigan consumer sentiment and inflation expectations at 10 a.m. I was going to short, but I'm a little bit late. If we drop enough, I'll go long too. I'm going to buy this. Apple seems like it's heading up. We're getting into very small positions today because we've been going a little bit light. Took half off there. Not a big... Alright, so there we go. Spend another little $15. Slow and steady gains. Wins the race here, chat. Slow and steady. Watch Apple. We're going to scale up our size now, get a little bit larger in here. Nvidia's falling down though, look at this. All right, so we got 3 contracts here. I might add to 4. All right, caught that. Another little 15-20 bucks. So far, so good. Look at Apple start to push up. And again, when you're day trading the futures market, this is what I'm doing. I'm looking at Nvidia and Apple because these are what make up the NASDAQ futures contract on the left. The NASDAQ is the NASDAQ 100. So I'm trading the QQQ price action here, and these 2 stocks make up the NASDAQ. Apple and Nvidia heavily weighted and influential. And so, you know, that's what we're doing here is we're looking at... yeah, that's what we're doing is we're watching like strength or weakness in these 2 stocks to correlate what the NASDAQ is doing and try to get in front of it. And yeah, we're at the top again. It looks like we're going to start pushing towards highs. Lifetime highs are up here at 567 though. So here's lifetime highs right here. Here's recent highs at 550. It was like a previous high up there. So we're heading up. And I mean, user 122, brother, this is why it's important not to be definitive, man. Regardless of whether you're right or wrong here, which so far it looks like you're wrong, but regardless of whether you're right or wrong, brother, there's something I say all the time, which is that the traders that are the most definitive with specific direction are usually the newest, like the most rookie traders, right? The traders out here telling people, do this now, are typically traders who have the less amount of experience. And the reason that is because traders that have been around the block a long time, they understand nobody freaking knows. And so they're certainly not going to pressure people in the chat room to go one way or go another, or buy now or sell now. It's just not something that traders that are experienced do. Why don't they do it? Is because nobody freaking knows if it's going to go up, down, or sideways. And like telling somebody to sell, 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 and then having the market rip up like this is a bad look, brother. Just, you know, just to put it out there. Like, it's all good. I'm trying to help you. Market's ripping up right now. Market's ripping up. It's also one of the reasons, guys, you don't want to ever listen to anybody in the chat because nobody freaking knows. Don't listen to me either. I don't know either, right? I'm not trying to hate. I'm just being honest. No, you didn't need to put him in timeout, Pawn. I was just talking to him, trying to help him, you know. Be like water. Yeah, for sure. Bruce Lee, I said it on Top Step TV. My favorite Bruce Lee quote: I don't fear the man that has practiced 1,000 different type of kicks. I fear the man that's practiced one type of kick 1,000 times, right? Point is, don't paint everything with a broad brush. Understand, like, it's better to master one thing in trading than try to trade every strategy under the sun. All right, guys. Lifetime highs are right above us. NVIDIA dipping down. If we dip down, I'm going to buy the dip, see if we can catch the magnet-like behavior. But it might tap this and then come right back down, though. Here we go. Too late for me. Apple breaking lifetime highs. Or no. Yeah, Apple's not breaking lifetime highs. Apple's getting close, though. NASDAQ's about to break lifetime highs. Lifetime highs are at 567, so we're at 565, 566. We're right at lifetime highs here. There's the push. We just broke lifetime highs on the NASDAQ. Got up to 570s. I believe it's lifetime highs. Let me make sure. Yes, we just broke lifetime highs on the NASDAQ. Lifetime high break on the NASDAQ. We'll see if it's a liquidity grab. But okay, there you go. Yeah, so user, you're back. Pawn unbanned you. NASDAQ just broke lifetime highs again for a split second at least. It's now up to 572s, 573s, 574s. 575s, 576s here, chat. NASDAQ's pumping right now, breaking lifetime highs over and over again. 575s. It's moving here. Hey, Aaron. Adam Aaron will always affectionately be referred to as Aaron. Some of y'all are too young to understand that joke. Chicago PMI data came out. That's not big. Chicago PMI is pretty insignificant. And it didn't come out today anyway. Bowman's speaking right now. Maybe that's influencing things. But NASDAQ just broke highs again up to 584s, 585s, 587s, 588s. Tapping 590s right now. Craziness. Hey, nice Tessie. Why not long? I'm going to start to short this, believe it or not. But it's going to be one contract tiny. Just because I think we're up a lot. We might correct a little bit. But who knows, man? It's a risky endeavor. Don't copy me. I have no freaking idea what I'm talking about, chat. I'm already green on the day, too. So if I lose, it's not the end of the world. Trying to top pick this, which is a risky endeavor. Don't copy me, chat. The momentum's here. I'm trading against the momentum, but don't copy me. Kind of flat. We're too close to highs here. I gotta cut it. Yeah, we lost 20 bucks. We're still green, but definitely not what we wanted. We might try it again. Let's see. Breaking highs again. I think it wants 600s, but Lifetime high breaks here, chat. '96s, '97s. All right, so we just made like a little bit of money. We're green on both the accounts. We made about 20 something dollars on our other account, shorting the top of this. We'll stick on this account for the day, but I'm shorting again. Kind of a risky endeavor here, but I like this downwick pressure. There we go. Ah, I didn't catch it. There we go. All right. Green on both accounts. What do you think about investing? Somebody said, what do you think about? I don't know about this investing guy. Who said that? Oreo. You know, I would just, okay, look, you got a lot of people that try to give out stock picks, but coming from somebody that's seen it all, I think, okay, I think, let me think of the easiest way to put it. I think there's a conflict of interest sometimes, right, with people that give out stock pick videos. And what happens is kind of like AMC YouTubers, right? Like what happens is that, look at my hair, bro. I need a haircut, dude. This is what my hair looks like in the morning, dude. Wow, look at the 15-minute shark in the NASDAQ. This is what my hair looks like in the morning. But no, what happens is like these people putting out stock picks. Okay, the issue that I have with them is that there's a conflict of interest there. What's the conflict of interest? The conflict of interest is that they want clicks, they want views, right? And so when they tend to prefer looking at really hyped up stocks that are a lot of the time extended at this point in time. And so like that's generally what happens. Like I remember people pushing, look at, all right, lifetime high just broke again. We're over 600. We're at 604s right now. 604s. Still making moves up. Nvidia pushing up. 606s, 607, 610s. NASDAQ's hella strong today after this payroll report, guys. Hella strong, man. Wow. Right, so sometimes they front load. Sometimes they front load into positions and then say, hey, this is the greatest stock of all time. Although the problem is, if you trade mega caps, you ain't moving freaking Apple, Amazon, like Walmart. You're not moving it. We could all buy 1,000 shares of, you know, Nvidia at the same time. It ain't freaking moving Nvidia. Not in any significant way. The float's just too freaking large. Market cap of trillions. We're not moving Nvidia, guys. But what they end up doing is they focus on hyped up stocks, right? They end up focusing on like the biggest, they end up looking at what stocks give them the biggest viewership, and then they cover those stocks only, right? So regardless of whether they think those stocks are strong, weak, good, bad, they act like they're the greatest stocks ever, so they can kind of pander to the viewership and the interest of those communities. That's the issue with it. Now, some of them are good. I don't know which ones are good and which ones aren't good, because to be honest, I don't take my investment picks from a bunch of YouTubers. No offense to them. I'm super confident in my own discretion regarding stock picks, to be honest. Like, my investing has done me really well, and I'm just more confident in my own, in my own analysis versus other people, specifically in regards to stock picks for investing and swing trading. I think if anybody watches this stream, you guys know how accurate I've been in terms of predicting movements in broad markets like blue chips, swing trades, like dip buys for longer term trades and investments. And so I'm just not going to listen to anybody else there. And that comes with confidence. And again, like, I'm not even saying I'm right. Maybe I'm wrong in doing so. Maybe they're better than me. I don't know. But I'm confident enough in my own trading there to not copy anybody else in that regard. I look like Rick's deputy in The Walking Dead. What's his name? What's his name? He's the guy from The Accountant too. He's the bad guy in the first season of The Walking Dead. He's also in like The Pacific. He's in a bunch of shows. Yeah, I talked about this again. I'm gonna keep saying it just because it's fun to see. Somebody accused me of being bald and using my hat to hide the balding. And it just, you know, with this freaking head of hair, dude. I got too much hair, not too little, dude. Look at this. My daughter says that all young people try to make their head look like this. They'll give themselves perms trying to get this type of curly hair now. Apparently straight hair isn't cool anymore. And like curly hair is cool. And so my daughter jokes around that like young people literally give themselves perms to try to have this type of hair. Top 3 heads of hair in the world right now, they say, guys. NASDAQ's still breaking highs. We're up to 612s, almost 620s here. Moving. Apple up to 244s. Nvidia up to 146s. John Bernthal, yeah. Yeah, that's who I was talking about. I think the hair is dope, yeah. The real reason I wear hats is because my hair is so curly. When I wake up in the morning, it's like a fro. It's like, you know. And so it's just hard to control. Yeah, Shane was such a bad guy. Like, I can't even judge him for the first season of The Walking Dead. Because, like, if you think your partner, like, in the in-world scenario, you can't really judge. But the wife was terrible, too. Right? Like, let's be real here for a second. Like, Rick was the only good dude, you know. All right, we finally got a dip. I don't know what I'm going to do. Apple's still pumping up to 244s. Dip it down a little bit now. Oh, I'm definitely jealous of your beard, Pawn. Yeah, I'm just glad I have hair, really. Like, and again, I'm not judging you if you do. Bald's beautiful. I'm not judging, you know. Yeah. Top 3 hair influencer. Is that a new thing? Hair influencers? Alright. I'm waiting here, guys. I'm trying to take trades. I just don't see anything I like. We're up a little bit too much for me to want to short. How do you decide what percentage of your cash to invest in each trade? I mean, investing is one thing. Trading is a different thing. Trading, you know, I have enough buying power to be able to use 20% or less of my account to take buying power per trades. And I'm not risking, like, people have this misconception that if I've got 100K and I end up taking trades, and the amount of equity I have to spend on the trade in terms of buying power is 20K, that's 20%. Like, I'm not risking 20%. You know, the NASDAQ's not going to go to 0 while I'm holding it. The SPY's not going to go to 0. The S&P 500 is not going to go to 0 while I'm holding it. So that's nowhere near my risk, right? Your risk has to do with your stop level, your exit level. And so it depends. You should only be using a small percentage of risk per trade, though, and it depends. Like, the problem is that the marketing that's put out there for traders is crazy. All right, guys. So consumer sentiment expected at 73.1. We also have inflation expectations at 2.7% for 1 year. 5 years expected at 3.1%. And again, consumer sentiment for December is expected at 73.1. 73.1. It drops in less than 2 minutes now. Chat, less than 2 minutes for this. Well, I'm not holding overnight with that, David. So that the 20% rule I'm talking about is day trading specifically, right? So that's day trading specifically. When I'm investing, I use even less, much small percentage of my account. All right, guys. Michigan consumer sentiment in less than 2 minutes. All right, here we go. Is Belbin still speaking? All right. All right, 20 seconds, chat. 20 seconds until Michigan data comes out. And there we go. 5 seconds. Markets around lifetime highs. All right, Michigan consumer sentiment higher than expected. 1 year inflation expectation higher than expected. Everything else is flat. 74 versus 73 expected for consumer sentiment. 74 versus 73 higher than expected consumer sentiment, but 1 year inflation expectations for December came in at 2.9% versus 2.7% expected. 2.9% versus 2.7% expected for 1 year inflation expectations. Consumer sentiment 74 versus 73. Market is a little bit indecisive here on how to react to this. On one hand, we had higher than expected consumer sentiment. On the other hand, we had a slightly higher uptick in inflation expectations, 0.2% higher than expected at 2.9 versus 2.7 for 1 year inflation expectations. Now, the inflation expectations is not like an end-all be-all huge report. It's a relatively minor report that's not going to influence the market too much. Same thing with consumer sentiment. But it is something, and you can kind of see the big indecision on this candle right now for markets, just in terms of reactions. We're still around lifetime highs, so the question is, how long do we continue to push and break lifetime highs? We're just up so much, man. Yeah, we're trying. We're just kind of wicking up and down heavy. Now we're popping up, breaking highs. We're trying to again, but I don't know if it's a liquidity grab either. We're up there. All right, so we just made about $60 on our other account. Nvidia turning down too. Big liquidity grab. If you want to know what a liquidity grab is, that's what it is. It broke highs and then dumped down immediately. Interesting here. And again, if you want to day trade with me, we're day trading on Top Step X. We're one of the top 3 most biased people of all time ever in the world. They say definitely top 3-ish most biased ever. Understand CFTC 4.41. We're not going to tell you what to do at all. We have no idea what we're talking about. We might be wildly wrong about anything and everything I say. Do not copy me. Not an investment professional. I'm certainly not liable if you lose money. I have no idea what I'm talking about. Do not copy me. Still, if you want to help support the channel, check out Top Step. Top Step's funded account program for futures. They give you a demo. They test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. Most day traders lose. And frankly, it's a lot cheaper to lose on Top Step. But if you pass the test, you get a 90% split. It's cheaper to lose on Top Step for most people, right? There's always outliers, but most day traders lose. And so if you put up your own 5, 10, 20, 30K, you're probably going to lose your first account. That's what happens to most day traders. This is what happened to me, at least. And instead of risking that, you can risk $50 per account. If you fail, you're out $50. And again, they're going to give you a 50K demo. To pass the test, you got to make 3K without losing 2K first, following their rules and conditions. And you want to confirm all this stuff with them because I'm biased, because I'm an affiliate of theirs. But if you pass the test, you get to keep your first 10,000 in profit and then 90% split afterwards. So a 90% split plus your first 10K is very similar split to funding your own account. The risk is noticeably more risk averse in my opinion. But again, confirm it all with them, not an investment professional. Trading always involves risk. Understand CFTC 4.41 hypothetical or simulated performance have limitations, but on Top Step you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Patterns are super similar to blue chip stock patterns. It's where most pro day traders day trade. And if you watch me day trade here, it's very similar to day trading stocks. If you want to check it out, here's the link. Yeah, prop firms get some hate, but to be honest, Top Step is, you know, the most legit in the world. And like, honestly, most day traders lose. And I think that there's a lot of ego that float around. So every trader thinks they're going to be some type of prodigy savant that somehow just gets started day trading. Part of it is marketing. Like people try to sell you courses. Like people are trying to sell you courses. And so they want you to think that you can take 5K and turn it into 100K if you just buy their course. That is so improbable to happen. And it's much more probable you're going to lose. And that's why Top Step's valuable. And so the critics of Top Step, like the question is, what's the better option? Do you genuinely think funding your own account is the better option for a new trader? Absolutely not, in my opinion. But again, I'm biased. All right, so we're finally getting that breakdown after the liquidity grab. All right, we're sitting tight. Market's flat, boring, choppy, breaking lifetime highs for a while today, and now we're kind of sitting neutral here. All right, we got a couple contracts here. We got 3. We're going to take some size here. We got a risk that we could take here on this. 3 contracts. There we go. Took a little bit off. 2 contracts left. We might add back to this too. There we go. I take a piece of this off here just because I see some strength showing up. All right, so we got 6 contracts here. We're trying to take some risk, to be honest. There we go. We'll let the last little contract hold here. So we just made a little string of trades there. We're up pretty good in both accounts. Honestly, as long as I could wait for the opening bell, I'd typically do very well. And Apple's surging up here. The only problem with me shorting it for longer term is Apple's surging up to 245. So where's the lifetime highs for Apple? Is this it? Wait, is Apple at lifetime highs? Yes. Apple is at lifetime highs, guys. I think Apple just broke lifetime highs. Yep. 56 is lifetime highs. We're now at 57. The problem is Nvidia's coming back down with this, but Apple just tapped it. I'm going to buy 1 contract here. If we retrace enough, I'll buy 1 contract, but I want to wait because I think Apple is going to dip a little bit and then probably make another test for its highs. But I need a pullback large enough and we might not get it, and that's okay. Maybe I just should have bought in anyway, but I love to get a cheaper entry. It's all good. All right, so we bought it 1 contract here. We got a little pullback. This is good enough. Take 2. You gotta be careful because sometimes they will try to trap us here with some stuff like this. 3 contracts. We'll take 4. There we go. We only got 3 contracts now. I will add to this too if we get an opportunity to. All right, we just added. We got 5 contracts. Took a piece off. 3 contracts left. There we go. Oh shoot, now we're short. All right, well, we made some more there. You can see the accuracy for all my top step accounts here. So some of these are eliminated combines that we were just playing with. So the eliminated combines are the top 2 right here. But so we'll just bleep the eliminated ones out. But these are our 3 active accounts. 77.7% in one. 65% in another, 65% in another. So, pretty good accuracy all around there. Yeah, Apple is at all-time highs. Yeah, some would say my voice is the top 3 smoothest in the morning. Nasdaq's breaking lifetime highs again here, Chad. Just broke lifetime highs. I gotta go with my intuition with Apple. I just gotta hold a little bit longer. You guys heard me say, hey, I think we're gonna push up. I think Apple's gonna make another test for all-time highs. I made a little bit long. I was kind of a wimp with it, though. I could have made much more. Absolutely correct about it, too. Ah, it hurts. We're green, pretty green on both accounts, though. Today alone on both accounts, one of the accounts we're running at 75%. We've had 8 trades, 2 wins, or 2 losses, 6 wins. Running at 75%. The other account, or no, 75% total. Let's see what we're running at today. Yeah, 75% today. 8 trades total, 6 wins. The other account, today we are running at about 69%. So this account that you guys see here, we're running just under 70% at 69%. We've had 35 winning trades, 16 losing trades. So far so good there. Top 3-ish beards ever, for sure. Pawn's number 2, though. Gandalf's number 1. You know, we can't really beat him. He deserves it, too, you know. Gandalf the gray, not the white. Yeah, you know, Gandalf the gray. All right, Chad, how you guys doing today? You guys red or green here? Do we cut rates December 18th? We did a poll. We got about 600 votes. 71% say yes. 20% say no. 9% say John's cool. I think we cut rates. I think we cut 25 basis points. It's probably what we're going to do. It doesn't mean that's what we're going to do. It's just probably what we're going to do. Feeling really 90s in here with this music. Green, red. All right, so we're pushing up again. Part of me wants to short though. We're gonna short. Add up to 2 contracts, that's it. We're not going to scale in anymore. I just think Apple's corrected some here too, so I think we might come back down, but who knows, man. All right, we took half off, and I think we were correct here. Now we'll add it back. Got a little bit of confirmation here too. Oof. I'm gonna take some risk here. 4 contracts. Ew, I don't like that high break. Depends on what Apple does here, though. But yeah, we might go red in the account today. I want to take some risks, but it's just so difficult to make money here. We came right back down, so we actually didn't do as bad as we thought. All right, we ended up getting out. We're still slightly green on the day, I think, now, but let me see. We're gonna try to take a risk, see if we can get it back here. Bad fill. We'll take some size now that we're really deep in the green here. All right, got ourselves back to green on the day like we wanted. Caught the liquidity grab short. Look at that red candle here too. Now we're long. Kind of trading the chop. Little baby gain, I'll take it. I'm pretty short biased. I don't like that move now, though. Let's see. Wait, this might change my sentiment. I don't like that candle. Yeah, look at that candle. Right at the lifetime highs again. I don't like that candle. Very choppy range. Look at this range here, chat. Wow. Look at this. Depends on what Apple and Amazon do, and Nvidia, I mean here. Depends on what Apple and Nvidia do. Get ready to break lifetime highs again. And we're up there now. We're breaking. Yeah, we just tapped over it. New lifetime high, 635s. 635, 60s. Or 637s, I mean, new lifetime high. The question is it a liquidity grab? Or are we going to start really running up here too? That's the question you have to ask yourself. I'm going to short this. I think it's a liquidity grab, but I could be wrong. We already got a pretty big cushion on the day. There we go. So we're going to immediately take this off. We're just scalping the top of that range there. There we go. All right, we got a nice cushion. I'm going to start to take some size now. All right, we broke highs. 642's new lifetime highs. 643's new lifetime highs. Still heading up. 644's new lifetime highs. We're right around it at least. Somehow I made money shorting just now, but $645s. It's time for this to slow down now, I think. Two contracts. Just made about 20 bucks again. Chipping away at it. I see Apple start to turn is what's happening. So look at Apple turn. Apple's turning quickly down. Nvidia's turning down too, so where's Bitcoin at today? $99,000 still? Okay, gotcha. Why not long? I don't know. I'd rather play the extension. It's just me personally. Like, I know that's counterintuitive to a lot of people, but you know, since we're green on the day, and what's our accuracy rate? Our accuracy rate today, doing what we're doing, is 67, 68%. So we do it because it works, for lack of a better word. And we usually get out before the trouble starts. So I do it because, to be honest, there's a really easy risk, right? Like, what do I mean by that? I mean, I can short right here and I can get in short. And if we break this top, super easy risk level, I get out. Don't have to worry about it, right? And so if I get in around the top, if it breaks highs, I can cut it. I can jump out of it. But if it breaks down, I can hold it and add to it and do different things with it. And so that's kind of what you see me doing, is using the high level as a risk. Here's my trades today, right? So you can kind of see what I'm doing here. Very small trades, but on Top Step X, there's zero commission, right? So there's literally no commission. There's a tiny amount of fees, 74 cents per contract fees, no commissions right here. And so I can do this and it works, you know, no PDT roll in futures. I'm gonna get out of here though, guys. So listen, I love y'all. Y'all be safe. Next week we got CPI, massive report next week, massive report. So be ready. We will cover it live like we always do next week. So be ready to cover CPI next week. We're gonna cover it, of course. Huge report, big report. Something you probably want to pay attention to is you know, next week's CPI report. So just tune in. Big report. We also got a lot of stuff coming out over the next few weeks here. We got CPI, PPI next week. I'm trying to see, when is GameStop earnings. GameStop earnings are next week. So next week on the Tuesday. Next Tuesday we got GameStop earnings. We also have C3 AI Monday. So C3 AI earnings are on Monday. Oracle earnings are also on Monday. We might cover those. Tuesday evening, GameStop earnings. They're expecting a flat 0 EPS, 900 million in revenue, minus 16.5% growth. We'll see what happens there. I don't think they're doing an earnings call typically. But yeah, I'm gonna get out of here. Again, if you want to check out Top Step, 0 commissions on Top Step X. That's what I'm using here. Link is in the description. Check it out if you haven't already. I appreciate the love. Thanks so much, guys. We had almost 3,000 people watching for Non-Farm Payrolls, so hey, I appreciate it. It's really fun to have thousands and thousands of people watch the stream, concurrent viewers, and you know, been a fun week, man. Fun time for the channel, fun growth for the channel. You know, if we look at the channel, we've been growing, you know. So if you look at the channel here, check it out. Jerome Powell, we got like 35,000 viewers here. We had thousands and thousands of people. PMI data, you know, we had Fed minutes report, PCE data last week. We had the jobs report this week. We had NVIDIA earnings where we had like 8,000 viewers. So it's just been a fun time, guys. Fun time. I'll see you guys later. I love you all. You'll have a great day. Subscribe, hit the notification bell. We'll be back next week. CPI report next week. So be ready, chat. CPI report next week. And yeah, the week after that, I think we have... let me see. The week after next, we have... I'm going to get out of here. I love you all. You'll have a great day. I'll see you guys next week. Later, chat.